Good morning. It's August 2nd. We're going to be streaming stocks, options, futures trading today. Hope you guys had a good rest of your evening. You've had a good morning. Sub up, like up, comment down. Happy money sticks around. I'll be looking at technical analysis, trading futures, options, stocks. Looking at the SPY, GME, barbecue, Tupperware, Smile Direct, whatever. US did get credit downgrade, which is pretty big news, and market is reflecting that at this point. Looks like it was down. I checked the futures, but this is maybe a whole % down this morning. So could be a catalyst for a top or some selling off, starting with that engulfing candle the other day and all that volume. Yeah, so we'll see. Last time there was a credit downgrade, I believe, was in the 90s. So it's been quite a while. Good morning, David. Good morning, Tasty. Good morning, Guts. Train barbecue is suspended on T212. You can't buy it anymore? You can't buy it or sell it? Did it give you a reason? I don't know why I haven't done it yet, but what I'm trying to do now with daily SPY options, makes sense to have just have a cash account. So I'll get back over that 25K. Morning, Maui. BD does not make it easy. Change to a cash account. TUP done. It's cooling off. Might be done for this week. I don't know, it's been resilient though. If it holds support and breaks out. It's been a fairly straightforward trade. Anytime it's broken a high, it's not been false, it's been real. So, you wait for that. But it looks like it could be slowing down here. Be building head and shoulders. Market is about to open. Here's some BBBY this week. Morning, Mohammed. There we are. Market's opening down 0.7%. Everything's waking up. I think GME was down. GME's down almost 2%. Barbecue's not open yet. No open for you. Anything open? Market's kind of... Whoa. Very sluggish. I don't know what's going on with barbecue. No trades yet. Is it suspended? You said it's suspended on T212. That's a brokerage, right? That's not... Barbecue's open there? Looks like the SPY's even barely open. Everything's still stuck in pre-market. Yeah, no trades yet. Is it done? That it? Game over? Well, there's one less ticker to have to look at. GME's down 3. Getting down to that support level, potentially. SPY is very, very slow this morning. Tesla's down 1.8. Sold a few shares yesterday. Been slowly scaling out the last couple weeks. IRM has earnings tomorrow. It's coming down a little bit there. Yeah, I don't know. Maybe it's suspended here too. Doesn't say it's suspended. Doesn't say it's closed. But it doesn't say it's open. Up 3%? Is that just Weeble doing that? Let me see. Oh yeah, there you go. E-Trade shows it's up. Up 3%, 26.95. Is that 3% up? Oh yeah, it's right here. Weird, Weeble's not getting the data anymore. Yeah, I'll keep an eye on it. It's 26.75. It's up 2.5. I don't know why. Eyes coming down here. If you get a bounce in the lows, I'd take a cheeky long there. That'll complete this inverse cup. Or no, it won't actually. 451.55. Barbecue now is flat, plus 0.38%. Not, oh, plus 1.5. Yeah, it's just bouncing around basically where it opened. It's at 26.36, so right around here. Right around here, still below that trend line. I don't know. They were saying on the PP show that it's back up above it, but even if you're very conservative with it and you put it on these wicks, I mean it's in the area. It's not like perfect. It's in the area, but it's definitely below the breakout to the downside with that move yesterday. Next down 2.2. Anything survive this pre-market? Rat, I think, wants to maybe start waking up here. I like this increased volume on this rally the last few days. Zoom's down 2.6. Velodox down 2. Wonder if this needs the market to rally. Zim's down 3. My Chipotle plays up a little bit. Island boy. Yeah, barbecue's not showing up on here. Barbecue's now down 3.5. At 25.21. Oh, right here. Market's very slow. Wow. Oh, I got stopped out of Mullen. Mullen. Maybe it was a stop hunt. Looks like it could have been. Yeah, I didn't want to break there. I suppose that could be the very lowest of the right shoulder. Fine to take some off though. What else we got going on here? Cost is down 2.6. I want it to hold that 9 moving average. Proterra is down 5.7. I want that to hold that breakout. I went long there. I just got stopped out. GME's down 2.5. Barbecue's down 3.5. It's at 25 cents. Dude, the market's very slow this morning. That's crazy. I'm trying to go along. Miss Fresh is up 18%. Up 5.8% in Germany. Weird. Closing only, John Bennett. Wonder if Weeble's doing that also, because it's not even trading on here. And on E-Trade, it's... I mean, it's not dropped a lot. It's only dropped 3%. Could get heavy if they don't 451. Indeed, that would be a level to watch for the break. You just bought? Trading 212. Should I resell GME Cash Group? I'm still bearish on it, so I'd pick probably at least like a 25 delta or 20. So depending on your date, of course, that'll change. If you're looking at monthlies like August, that's like 19 and a half. But for every date, of course, it's going to be different delta. For the weeklies, 25 delta is 20 and a half. Yeah, I'm surprised barbecue's not dumping more with platforms. You're not able to buy it. Dish is down 2.8. Rover's up 18. I think that was on earnings. MNK up almost 10. Oh, never mind, 11. 11 and a half. I want some MNK. Dave Teladoc bounces on that 50%. Oh, is it Proterra? Proterra. Nice, Proterra's climbing back up above. Not quite. Barbecue's down 1.6. So kind of hanging out. It's at 25.69. Not a big sell-off on it. GME's down 2.5. Oh, the SPY is very slow this morning. It's crazy. It's been a while. Oh, SNMP. I meant to look at that. Dang it. Halted down or up? Doesn't look to be halted. Oh, it was halted? I'm behind. I know, it's come up so much, but... yeah, if this breaks the high, let me know. I'd be down to trade it. He's fine on T212. Now it's down 0.5% in Germany. Well, there it's halted. Dude, you can't trade this thing, it halts too much. Flow is tiny. GME hanging out down 2.6. Barbecue's also down 2.2. Dish is down 2.5. A shot clock on Zoom. Rad. Neg. Chipotle. Look at that. Rad's up 1.5. That's some good relative strength there. Little value rotation. Do it. I like the value. I've been trying to get some cheap rad calls for a while. Leaps. Excuse me. I haven't seen the market this low in so long. In the morning. Barbecue down 1.2, 1.9. GME is down 3. Tesla's down 1.3. I mean, I think it kind of shows that the price where it's at is for barbecue is, I think it's held up at retail for one. Also that it's basically priced for being worthless with a small glimmer of it not. So nothing really changed. Like it's not ever been, you know, there's not been shareholder value ever in it since chapter 11 or whenever. It's always been about hoping that Brian Cohen or someone is behind it and going to bring that value. But in chapter 11, like, there's not enough money to go around. That's why they're in chapter 11. Yeah, barbecue's up 3% now. At 26.98, so it's right here. If it gets over like 30 cents area, might jump back in first. Another swing. I mean, there is a lot of interesting stuff with even the bankruptcy filings. Yeah, that makes you think that it's somewhat of a not a cover-up, but that there is something going on that of course we're not privy to know about. Yeah, it's at 4%. I could show it on this other chart. Doesn't look as good. That was that dip yesterday on it. it's at 4%. It's still in its barcode range. Settle down. 2.5. Three and a half. It's basically just bouncing up against this resistance, I think. Until it gets above that resistance and turns it into support, I think it'll probably keep coming down. 27.20. Yeah, it's like right here. Right here. I'll keep an eye on it for you guys. It's yeah. It's up 3%. Mullen's down 4.8. Oh, I guess that was a good stop loss trigger. Good job. Mouse down 2.6. Tear down 4.7. Alright, Teladoc, I want to see you bounce somewhere here. SNMP is back resumed. It's down 7%. Barbecues up 4%. Three and a half. What are the spread on here? It's got to be crazy, right? Yeah, look at that spread. 896 and 975. Do not mess with that. That's outrageous. $3.6 on barbecue. Adds up 1.5. Plug it. 2.5. 2.5 green on barbecue. GME's down 3. Link's down 3. Charge points down almost 4. Safe's down 3.3. Tesla's starting to recover some. Three and a quarter down on GME now. High's coming down a little bit. Barbecue still up 3.3. Is that the company that gives 0 to the shareholders? Which one, David? SNMP? Are you joking about barbecue? Buy coming down here. Barbecue up 1.7. Came down a little bit. GME down 3. Dude, market is so slow this morning. Crazy. Have to figure out where it's gonna go, which direction. I mean, we do have a little more room for this inverse cup. Back to the FOMC low, 451.55. potentially move down here before we bounce for an inverse handle. Barbecue 2 1/4 green, popping between 2 1/4 and 1.7. Hey, I'm back green on my dish. I don't know how that happened. The spread. Oh yeah, those are wide spreads. Rad. It's up a little bit. Whole market's kind of waiting to see what SPY's gonna do, or I guess small caps. This is crazy. I haven't seen this in a while. Well, the fact that barbecue is starting to seems like it's starting to wind down, at least on some brokerages. You couldn't trade it this morning on T212, and Weeble's not even showing it's open. Might be an early sign of what's to come. Yell's down 11%. Up's down 18. Okay, now we're looking to see retracement. This aggressive move broke through that. See if it holds this one. Builds a shoulder above that, it could still be bullish. Eyes slowly creeping down. Let's see what we got here. American superconductor? They have earnings? Pretty big gap. AMC's down 2.7. Rivian's down 5. Is about to test the low of the day. Here is down 4. Is that a new low? No, not quite. Mara's flat. There's a new low on the day for SPY. Got some volume coming in there too. All these lines from here. want this one right here. Lucid's down 5. They have earnings coming up. Lyft is down 2. Spies slowly falling. AI is down almost 10. Let's see, barbecues up 1.5. XPEV's down 6. Mio's holding up pretty well. Cypher mining. Dish is down 4 now. Brad gave up some gains. Cost down 4. Proterra's down 8. Morning, Mo Lava. I don't know if I said good morning. Barbecue's up 1.5%. We'll see if Spy's building an inverse head and shoulders here. Or if it wants to dig a little deeper for an inverse cup. Sim and Zoom. Both red. Neg 4.5 in the red. Teladoc. That's not good. Oh, new low there on SPY. See if we bounce on, find support on that 451.55. S&P is down 20%. GME down 3.6. .7 on GME. Proterra 8.4. Yeah, I know. We're watching barbecue on E-Trade. Oh, now barbecue's red. 0.34%. CI ready? Grumpkin. Definitely doing a thing. 12 and a quarter this morning. Is any other energy ripping? Seems like this is an outlier with the market down this much. Could just be building a right shoulder here too. I need to see it break some resistances on its way up. GME is, or barbecue is basically flat at 26.18. GME's down 3.8 now. Getting close to our first support there. Morning, Zoomy. Morning, Southern Organic Trees. Thank you. Same to you, sir. Okay, I took the long there. Oh, Tesla sold back off. Barbecue's still flat. Boss bounced up a little bit, 2.8 down now. Rotera 7.6. Teladoc, little bounce. Consolidation day. Yeah, we'll see. Next down 4.4. Yeah, market is scared this morning for sure. Looks like we might be setting up this inverse head and shoulders, which would be good for gap fill. I would say that's a inverse cup completed. 451.60. This was 451.55. Didn't realize we got that low. Should have entered it down there. Thought we were still gonna go keep going, but yeah. So look like inverse head and shoulders, inverse cup and handle potentially, or it could be double bottom here and we keep just going up completely. Look for some resistance. If it is a handle, no higher than 454.91. What? Did I get stopped out on that long? I guess so. That's weird. GME bounced back to VWAP. Okay. Barbecue's up 1.4%. Yeah, the downgrade was last night. That's what caused the sell-off into open. But we might not have a continuation on that. Things that happened in the 2011. I heard it last time it happened was in the 90s. I don't know. Yeah, I mean, that's why the market's here almost down 1%. We gap down like 0.7%. Didn't put my line in for pre-market. Try this long again. Rounded earnings tonight? Alright. Do it. Let's see. Barbecue. Barbecue still up 0.5%. Oh, just trading flat. Yeah, they just got stopped out. Dish down 3-3. Market's moving very slow this morning. Doesn't want to disturb the bulls or the bears. I'm gonna sneak by. Moss has come up a bit. We're down 1.6 now. Roterra is down 7.6. Not sure I like this one much anymore. Hard to judge it though when everything's red. Just so happened to be on the date after it broke out. This article be as a source for downgrade time frame. Excuse me. Alright, we're going to dig a little deeper to that 450, 155. If we pass that, yeah, that would be interesting. That turns into resistance. MNK 17%. Rotair's down 8.2. Money happy. NTNT. Oh yeah, that's your let's get nuts. That's your IPO. Down 33. Wonder if this fib was a bit premature. Looks like it's bear flagging. Less SPY. What was that? Something just filled. Oh, RAD just popped up. Just sold my RAD calls. I made money on that. I should have good till canceled. I don't remember what I bought those for. Go RAD. I get news? Looks like news. CVS Health report. I don't see any news. That volume and pop looks like news though. That is the risk about just having a limit order sitting there all the time. Work against you. I was thinking it'd go up $5 now. What did I buy those for? I don't know, but now I want some leaps. Rad's up 4% now. Seems like some, I don't know. Eyes coming down here a little bit. Zim. New low of the day there on SPY. 451.48 is just below this FOMC low. Kind of want to grab along there. Barbecue's down 1.3 now. Let's see if SPY just flushes. Here's what happened the last time. In the midst of very tense debt ceiling standoff of 2011's, S&P downgraded US debt for the first time in history. 2011 was the first time? Downgrade plummeted 6.5%. We're in a lot different market environment though at that point. Markets experienced their most volatile week since the global financial meltdown in 2008. It took another 6 months for stocks to climb back up to their previous highs. This camp could be different. Investors know this devil, they've been through it before, and they saw that the downgrade didn't actually raise US borrowing costs significantly or hurt treasury markets. US treasuries actually rose as investors barreled out of stocks. Doesn't hit quite as hard the second time. Oh, that's what was since the 90s. We've had our best year. Hmm. 2011 was the first time. Wow. Weird as that was after the crash and everything. Never got our crash. Rad is hanging out kind of. Dish is coming down more, 4.3. Buy new low there. GME's down 4. I can almost tell where SPY's going to bounce based on GME. Yeah, still not seeing any news on Rite Aid. New high there, 4.7. Dang, the limit to close. Got me. Let's see, I think there were what? There were $2 calls for August, so those are the ones I need to get out of anyways. I just hope I made money on them. I've had those for a while. Let me see. See if I can find them. I got these on 7/7, so almost a month ago. No, 7/10, these are the 2s. I average into them. Is that what happened? $7.10, what did I get them for? Oh no, I think I lost a couple pennies on them. Looks like I got them for 12 cents. I think I put 10 on the limit order because that was the high price. Oh well, I could buy back in if I wanted. Market price is still 10 cents on it. Barbecue's down 0.8%. GME's down 4.3%. Is now down to 1.2%. So, wow. Wow, we just flushed, didn't we? I didn't even notice. We're well below that FOMC now. That's pretty crazy. Okay. Yeah, barbecue is still not trading on there. It's down 2.3% on E-Trade. Or tear down almost 9. Seems like it has pretty positive beta. Only rad is looking good on my, I mean, MNK, I guess, is up. We might be getting an engulfing weekly candle. Yikes. There's a new low there on SPY. Down 1.2. GME's down 4.5 now. Wow. $5.8 on Rite Aid. Okay. Partial? I just hit the market on those calls. I got January Rite Aid calls, 4 strike. Pretty far out of the money. I don't know what's going on with it, but I like the chart. I like the valuation. It's undervalued. Be a potential for some big moves. Think you got into tune, huh? They hooked you? They hooked you also? SPY's just still melting down here. Starting to flush a little bit. see if we can do a bottom here on SPY. That was a pretty major level it broke this morning. At 451.52. Look for that to be resistance on a bounce. We make it up that high. Maybe not today. Down 1.3, wow. Zim is flushing now. Dang, dude. Next down 4.4. Zoom's down 3.65. Rite Aid's still looking good. 6.5%. Still rallying. Barbecue's down 2.3. A little flush there on GME too, it's down 5. Going for the long there. 7.65% on rad. Let's go. Eight and a half percent on Rite Aid. Look at that thing wake up. Now I don't wish I sold those calls. They're still close to the price I sold them at. Barbecue very strong, like ox. Down 2%. Price targets don't really matter. But yeah, the chart looks pretty good on Tune. Doesn't look bad. I don't like all the bots in here pumping it. Makes me think it's over. But chart does look pretty good. You want to see it break this 230 level, this previous high and the support, and then you've got room to that gap fill, maybe 3160. No bouncing yet on SPY. No, no, no. I think Rad has room. Yeah, really to move to here. Breaks here. Up at that $2 level. Fish is down 6. GME's getting close to that first area of support. Saw a guy talk about it yesterday. Yeah. I don't think GME's very cheap yet. I think 15 will be very cheap. Yes, you could say that's rad. 30k in GME? Really? Right now? You just put that in? I hope it doesn't get to $15 for your sake then. Alright, we're actually going to get a bounce now. Let's see. VWAP's so low. Still not seeing any news on RAD. Going again. 9.5% now. $10 on it.
Trade for us as well. Caterpillar hitting at all-time highs on Tuesday after reporting its earnings. I want to take a closer look there. We're all about that construction giant. That's our 360 round. And up next, it's the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes to the technicals. John Kaufman takes us through the trades for United Airlines, Boeing, and gold, GLD. Coming up.
Barbecue's down 4 now. Rad's up 12, or sorry, 10 and a quarter. SPY's slowly edging up. Give me a little bounce there. There you go. Look at that rad. 11.5%. SPY kind of maybe double bottoming here. Don't know if I want to do some calls or not. It's market's definitely pretty weak. I did a C-min. I got stopped out on Mullen. Is it bouncing now? I get a nice rip on it. Oh no. Yep. Got out of that. TUP down 30%. See if it respects any of these FIP levels. At 50% retracements, 32.49. 61.8 is 26.21. GME's down 4.3. Barbecue's down 1.5. I don't think I want calls yet. Those contracts I sold this morning on RAD actually haven't come up a whole lot yet. I like to torture myself by continuing to look at it. Mercy's been pretty quiet. That's true. He's maybe starting to get concerned no matter what he tweets. People are going to continue to sink money into barbecue. We've got to be careful. Even if he says, sell BBYQ because I did, they would probably think it's bullish. I don't know though, the not for long. That still has me thinking that he's got Furlong working somewhere else. I mean, otherwise he's just completely just a dick. Is BBIG not trading on here either? What happened? Weeble's not letting this stuff go on anymore. Yeah, BBIG says it's down 12, or is it done trading? Even E-Trade doesn't look like it's trading. Okay, it is still trading. That's weird. Weeble's like getting rid of these OTC stickers. Let's see. Barbecue's down 3.5. He's down 4.5. Trying to keep the rest of his C-suite from leaving by making fun of him? Rad wanting to break that resistance. Do it. This bounce on SPY is very weak so far. But we have a MACD that crossed over. Maybe gonna get a green over the 9. Rad breaks here, next stop's $2. 2.06. SLGG is up 11 and a quarter. What's SNMP doing? Consolidating. Got cost down 3.5. Tear down 8.5. You sold half of your profitable shares? What do you mean half of your profitable shares? You have get an average. Yeah, I think IP does have earnings coming up. I have no idea. No idea what to expect for their earnings. Not really one I've followed, just other than the chart. But yeah, I mean, it has a positive beta, so you see it's just been moving with the market basically last couple days. Not really bag holders on TUP. Not yet. Only down 28%. Nothing. There you go, Rad. Oh, are they trading barbecue now? It's showing up? Yeah. Weeble woke up. I think. Still not showing BBIG. Yeah. There you go. Barbecue. Working. Genius. You just bought some now? Quite the IV premium you're willing to spend there, Seaman. Yeah, this is updated now. Is it just like very illiquid? Not sure why there's hardly any trades on it. Why the chart doing this? Almost 13% on RAD. Those options really haven't moved much yet. Spy's climbing back up. There you go, Spy. Boy.
That may be better or worse, people still spend on some of this stuff, and I guess they feel like, you know, these are small things that make them feel great, whether it's a new lipstick or a new cream for the
A
face.
weird chart.
And you have, as I right, makeup and skincare, and those are both growing areas. In fact, I saw for 2022, and correct me because this is just one statistic.
It's kind of delayed.
This area, an area of growth being over 525 billion and going closer to 600 billion.
Well, Pac West to dump.
For skincare and the like.
Yeah, those are probably global numbers that you're referencing. Here in the U.S., skincare is a $5 billion opportunity, a $5 billion market just in the mass channels alone. So tremendous opportunity for us to continue to go after that.
How is it that you are able to have a supply chain and labor and everything and get this right from coast to coast? Trying to produce this, where is your production done? You know, CEOs, CFOs have to deal with a lot.
You're trying to get more Pac West
in the air, not just their particular product, but all the costs and things that go into making that product.
Yes, so we have a highly resilient supply chain that has really carried us through these last few years, which have been
12.5% on Rad.
from a supply chain standpoint. You talk about
that is neat.
Port closures, the container costs have been astronomical for the last couple of years. Finally, starting to see those come down, and just the demand for our product has been so great. Just really navigating that.
Yeah, Alpha's done really well.
Been, something that our team has worked through seamlessly.
14% on earnings, but look at this chart.
Our supply chain, our ability to meet the consumer demand that we're seeing.
Elf was the squeeze all along.
Products here,
the Moas.
Container costs are much more reasonable now. That's a bit of a tailwind to the gross margin.
Gone from $20 to 130
basis points of gross margin increase.
Beauty products, man.
A portion of that was driven by lower
they make a lot of money.
Costs. So we're actually seeing an easing from a cost standpoint within the supply chain.
And this is vegan, cruelty-free. You have other brands under the umbrella.
Cruelty-free.
With 20 skincare brands.
GME back to VWAP there.
It's not just Elf, eyes, lips, face, but you also have skin, Well People, Key Soul Care. You can mention any others that you like. But I do think that in this new generation, is social media helping you? We see on TikTok and things like that, lots of makeup tips. They even sometimes show which things to buy to make that happen so that you could be so great looking like the person on TikTok.
That's right. So we have 4 brands in our portfolio today, as you mentioned: Elf Cosmetics, Elf Skin, Keys, Soul Care, and Well People. Those are the brands that we have today, and certainly want to continue to build our portfolio of brands. Building a different kind of beauty company is really at the heart of what our longer term mission is. But yes, on TikTok, Instagram, all of these platforms, short form content is increasingly popular, and so you saw us lean
down 2.5
this quarter, really just bringing to the table a variety of things to entertain and delight our consumers. But yes, the
Rad pushing again, 14% now.
See out there, it really inspires people to go out and shop and try to recreate the look, which is fantastic.
Yeah, and just quickly, I just wanted to know. I mean, would you say you're optimistic about
CVS?
The future? I mean,
okay, maybe it's some sympathy to CVS having good earnings.
It was a $17 IPO. Today, the stock is hitting a new high of 137. I just saw Morgan Stanley put a price target of 162.
Yeah, they had good earnings. I wonder if that's what it's from.
How would you quantify your outlook?
Weird, it's way outpacing CVS though.
I am very optimistic on our outlook, Nicole. As we talked about, we still have tremendous white space opportunity ahead of us, whether it be in cosmetics, skincare,
14.7%. This thing just woke up today.
Still a lot of room to go. We
16%.
We're still in the early innings here at Elf.
All right, good to see you, Mandy.
Been a while since I've made money with Rad.
For another incredible quarter, really appreciate it. Mandy Fields, Chief Financial Officer.
There was a time.
Coming up next, the Disruptors, and George Sills is here talking about Oshkosh. Now, the company just got multiple price target hikes. He's going to explain what he's watching with that and an example trade.
17%. Now those calls are going to probably be looking good. A little more punishment. Let's see. Yeah, they've over doubled since I sold them now. My leaps haven't really gone up yet. My January calls. Excuse me. Hmm. What happens at $2? $1.99. There's $2. Wow, just ripped through there. $2.65. 21%. That's my next resistance on it. A pretty major one. After this, it's $2.40. Dang. This call's 3x from this morning. Why it's good always check your charts on orders you have. I did check RAD this morning. It wasn't like a gap up, so I wasn't watching it close enough. I didn't realize my limit to close was so close to the price it already was. Usually when I do that, it's at least break even if I'm down on it. Big, look at all that volume. Okay, now my Januaries are up a little bit. Super wide spread though. $22% now. $23%. Excuse me. Barbecue's down 3.3. Rad's up 21. GME's down 3.8. I think Wall Street bets ruined Dish. Too many eyes on it. Shut her down. TUP's down 27. So it broke through this trend as well. And it's building a shoulder over here, so not looking good yet. Final support would be this one. That trajectory. A lot of volume on that last candle. Last 5 minutes on Rad also. In 1 million volume in 5 minutes, which is big. Big for this stock. Our daily volume is already 4 times what it was yesterday. For the whole day. Teladoc. New lows there on TDoc. Dang, this one I averaged in heavy on too. My favorite looking chart. I had to go and ruin it all. $21.48. Buy's coming back down here. See if we get another bounce on that support. Alright, Rad, let's just get to $4 then. That's what you want to do. Having to zoom out on this chart, it's so beautiful. $2.40 is your next resistance. Got 270. I might even look for a pullback and get back into some closer dated options. Jeez, 28% now. %. Oh my gosh. I look at those options now. They 5x'd. One time. The volume keeps increasing too. Look at this. Big resistance at $5. $3.80. $2.37. Wow, 40%. Holy crap. There's one level there, 240. Rite Aid technology chief to leave. That was yesterday. I can't help but think this is just CVS earnings and sympathy that's now just kind of catching momentum and causing some shorts to close, maybe. I mean, this thing has just been on a downward path for, I mean, at least a year. But if you take that out, it's still in this trend since what, 2021? COVID highs. Oh snap, the borrow fees come up too on it. Interesting. Borrow fees started actually coming up on it 2 months ago. I've never even looked at it. Not that high, but come up a lot. Just hanging on that 1% forever. And what, 2 months ago it started to climb. About 11% now. The earnings that triggered it 2 months ago? Coming into earnings. Yeah, and then after earnings, all through here, the borrow fee started to increase. Wheezy. 45%. Do it. %. Holy crap. Oh, let me look at him now. Oh my gosh. It would have 8x. Dang it. It wasn't like a huge position, so it didn't matter. Didn't matter a whole lot, but still. 262635 on Rad. It's up 52% now. Reminds me of the old days when Rad used to rip. Rip, rip, Rad. 27 is resistance, and then 3170. Parabolic, some might say. Took some profit on it. Nice, David. Well done, man. Take that profit. I'll give it back. Buy. Should bounce here.
Close. Now 2.5 hours into the trading day, stocks are selling off after Fitch downgraded the long-term rating for the U.S. Fitch Ratings cut the long-term foreign currency issuer default rating for the U.S. to AA+ from AAA Tuesday night.
61% on RAD.
Fiscal deterioration over the next 3 years. Yields in the dollar are rising, which is also lending to the risk-off trade.
1,000%.
Four major indices, which are near session lows, as we're about halfway through the trading day. The S&P 500, the benchmark, down over 1.3%. Dow Industrials down 250 points, or 0.7%.
A little bit more patience.
Heavy Nasdaq leading to the downside, down 2.3%.
Look at all the calls just bleeding.
Russell 2000 index down over.
Would have paid for all my bleeding calls.
4% today.
And some.
To help me break down this market action, let's bring in my co-host for the day. That's going to be Dan Deming. He's a managing partner at KKM Financial. Dan, welcome to the show. Welcome to the new studio.
Back in the studio.
Yeah, good to have you here today. So I wanted to get your first take here. 2023
breaking that new low.
A bull market, to say the least. Beat a lot of expectations. A lot of people expected recession. That didn't come along. The Fed paused. The rate hikes seem to maybe have dissipated a little bit. But your outlook, when you see something, some uncertainty come down the pipeline,
64%
like Fitch coming out and downgrading the debt, does that throw a snowball, or does that give the market an excuse to sell off?
Yeah, I think it's the latter right now, Tom, as opposed to the former. It feels like, the market was overextended here. By several metrics that was certainly due for a bit of a pullback, and a 1.5% to 2% pullback. I don't think it's overly significant at this point, but nonetheless, we are rolling into a new month. We did see run up into the end of July. And the shift in interest rates now, we're expecting the back end of the curve, Tom. We're seeing the 10-year now going to the highest level since November, 30-year pushing up to the highest level, going back till probably the middle of last year.
Yeah, over a year, yeah.
So that's something I think that's worth noting as we roll into this new month and with the markets coming off the recent highs, because when you see rates start to expand like that, it does lead for the higher probability of volatility coming back into the market, because you just don't have the backstop that was in place prior. So I think that's something to keep an eye on. Yeah,
that rising dollar back to levels that we haven't seen for about a month, and the 10-year you mentioned, 4.1%. That puts a little damper on the euphoria and the optimism in the equity market at this point. One of the names that reported earnings kind of kicking off tech this week, it was AMD after the close yesterday.
65% on RAD.
Reversed sharply after a pretty decent report. Let's bring in Jenny Horn, markets correspondent here on the network, to help us break this down. Jenny,
nice, Zooming. Well done, man.
Rosy for AMD post earnings after the close yesterday, but now seeing a little bit of
I think really just woke up.
Deterioration here.
Yeah, pre-market this morning even, it feels
176
like
was a nice buy.
Breaking
on that high.
I actually saw this headline, the fact that they're further pushing into their AI spend. I thought that would be read really positively, but shares are down about 8% now on the session. Now, week-to-date gains, obviously, but also sort of weighing on their year-to-date gains. The shares were up 82%.
I think it's CVS's earnings and just sympathy to that, and it has a lot more ripability, as it's been suppressed so much. It's got a pretty small float, very small float.
Second, of course,
there's,
to NVIDIA.
There's a lot of shorts in this one.
18% year over year to
they've been driving it down for
with adjusted operating
years.
income plunging 47% to $1
if you look at the numbers on it, it's kind of crazy. The market cap's super low for their revenue.
Both of these figures, though, were slightly
way lower than
the street's
barbecue even.
The data center segment did show their first decline since AMD began breaking out its results.
I know it's not the only thing to look at, but
and did come in short of expectations.
People might maybe starting to see it's undervalued too.
Chips for its PCs, which came in about 23%.
And presumably some shorts closing.
Despite plunging by more than a year earlier, AMD, though, has a pretty big AI story to tell. The chip makers said it successfully broke through Intel's stranglehold on the market for its central processor chips that are used in data centers. And they also now are really working on this new class of GPUs designed for AIs, which is used for some of those same data centers. So this will then put AMD up against
barbecue moving down right after the pass. And barbecue's down 4%.
And I think that should have been read as a positive. I guess maybe you could
chart's
say
working.
that AMD doesn't have the same sort of reach as a name like NVIDIA, but I think that if you look at NVIDIA and you take some of that success, I think that would be great for AMD to mimic that, because they have not been able to please a lot of these really high expectations that have been set out for the AI space. They've been weighing now this strategy by also ramping up their production of their flagship M1300 chips. in the fourth quarter, which are in short supply, but they do expect those to compete against NVIDIA's M1 or H100 chip. So again, I read this as a really positive story. This name has 2/3 of all analysts that have it at a buy rating, slightly down from the 77% of analysts that had buy ratings earlier this year, but still well above the S&P 500 buy rating ratio. So, I mean, this name is still pretty liked by the street. All in all, we are seeing a lot of analysts today raise their price targets. Move to the downside today, I think, is just in step with the rest of the selling we're seeing in the market, frankly.
Jenny, this is almost one of those stories where the stock's actually back down to the levels it was before NVIDIA came out and raised their revenue guidance based on their AI chip. But this seems to be a story that, hey, NVIDIA's got a product out there. Demand is too much at this point for them, and the M1 300 chip that AMD is going to use to compete with them in the AI space doesn't come out until the fourth quarter. Is that the problem that we're seeing, and why we're seeing that dip in the stock today?
Exactly that, Tom. And I think that markets got a little bit ahead of themselves with this AI craze now that we're seeing realistic timelines from some of these companies, or the way that it'll eat into some of their profits, or the way that it'll end up using a lot of energy. All of these different components I don't think were necessarily thought through, and we saw some of these names run up like 80, 90, 100% on the year. So I think right now just seeing that timeline is a good thing, no doubt, if you're a longer term investor of this name. I think that you like to see now some more clarity, frankly, on their AI push, but maybe just not the instant gratification the street had been hoping for. But I think that's going to be the case for so many of these names that have made this big push and big promise into AI. It's not going to be an immediate thing. This kind of technology definitely takes time, money, and resources.
Yeah, we'll see today if it holds these levels, because if it breaks down there, you got a ways to go to maybe another support level. All right, great stuff. Thanks to Jenny Horn, markets correspondent here on the network, breaking down the AMD story. Dan, I wanted to kind of get back to the Fitch ratings and the downgrade here. We kind of hit it a little bit that it's maybe not a big deal in maybe the structure of U.S. debt or the solvency of the U.S. I think we all come to that conclusion. But Yellen, former Fed Chair Yellen, came out with some commentary. She's pushing back. The administration, of course, they've caused a lot of the problems as far as debt goes. They're pushing back against it too. But then you had some of the analyst firms, Goldman Sachs, Citigroup, JP Morgan, that came out and said, hey, this isn't structurally that much damage to the economy or the markets, but at the same time, the markets were pretty fragile. Is that why we're getting this response?
Yeah, I think so, Tom. I think, and also what they cited in their report,
right.
And basically what caused the downgrade in 2011 by the S&P was the debt ceiling problems.
Right.
Similar timeline with this report. Now,
right.
Moody's still has, the AAA rating. We'll see if that lasts. But I think, does it mean on a macro level, as far as operational, is it that significant? Probably not, but it is an impact point.
Got an RSI divergence around the 5-minute.
Lofty levels. And also changes the narrative here, at least for the short term, I think, Tom, because now, there are issues that they basically brought back to the forefront that were causing volatility just a couple of months ago. So I do think that, there's a little bit more to it than what people are saying just off the surface. It's not that big a deal. Well, let's see if the mandates, let's see if the demand for U.S. debt continues. Also, the one thing about the Treasury, it's interesting, with her pushback was the fact that, there's no question. Look at the borrowing over the last year. Look at what they need to raise just to maintain the status going into the third quarter. It went up from like $750 billion to $1 trillion just in the last 3 months in their projection. So we are borrowing a lot more money at higher rates, so that could cause a problem down the road.
Yeah, I think so. Oliver Rennick and I talked about this before. I was sitting there going because
barbecue down 5.7,
camp over the last several weeks, kind of finally getting on board. And I'm like sitting there trying to think of some catalyst out there, some event that could cause a little bit of volatility in the markets. It's coming because, in my opinion, it's the dollar rising. Everybody thought the dollar was going to go back below 100. It's back below 102. But the 10-year yield at 4.1%, that starts to cause some damage to not only the tech space, but a lot of stocks that have made some pretty significant runs this year.
Absolutely.
And earnings coming up.
You're right, because it becomes competition for allocations, and as we continue to see that move higher, that could be a scenario where you start to see rotation allocations, and you're actually seeing it today, Tom. Look at what's holding up today relative to what's selling off.
It's volatile, man.
Names. You're looking at the healthcare space holding up. You're looking at consumer staples holding up today. It's kind of that traditional kind of rotation that we're seeing when you see disruptions like that, and the dollar going bid as well. So I think that this would be a good checkpoint for the market moving forward. Do I think it's going to lead to something much bigger at this point? No, but I think that it's going to be a good test for the market as we move now into the fall, and we're seeing a little bit of a pickup in volatility.
I almost think it's to this this kind of phenomenon that maybe the market needs this.
It does.
It does. For it to be a healthy bull market or bounce that we've seen, and for it to be extended, you need some pullbacks. This is the first pullback in the S&P 500 since the end of May.
Exactly.
I mean, that's a pretty big run without a 1% downside move in the equity market. And you mentioned the things that are leading the market today: utilities, consumer staples, healthcare.
Yep.
That doesn't typically equate to a robust or a bullish market at this point.
That's true.
Typically, people pile into those for a little bit of safety play, maybe some of those dividend names also. But I wanted to kind of get your take here on the ADP. Another beat here, but we've seen that divergence between non-farm payrolls and ADP. It seems like when ADP redid their formula just about a year ago, it's not working out the best for them, or maybe they're right with their metrics because they're more up to date than the BLS, but I'm not sure. But another robust
they found the bottom there today.
Yeah, and you're right, Tom. It has not been necessarily a harbinger for things to come on Friday when this
Nickel down 10
the last couple of months particularly. And last month being certainly one, and we'll see if it plays out this month as well. But I think you're right. I mean, I think the divergence here, and plus you're looking at private payrolls versus public.
5.7% down on barbecue.
Difference there as well.
Looks like it's going to keep flushing here.
Continue to defy
down almost 1.5%.
What the Fed had anticipated, and even though with the non-farm payrolls coming in a little bit the last couple of months, you're still seeing those weekly jobless claims that Ben and I talk about every week.
Right.
Coming down. Now.
Right.
So, but at the same time, inflation is trending lower as well. So we talked about that Goldilocks scenario. This will be a true test of that, I guess, this Friday to see how these numbers come in and how they're interpreted given the current conditions that the market's contending with.
Yeah, I think that non-farm payrolls number, if it's robust again, it kind of defeats what the Fed's doing. But when you look at the core CPI that came out last Friday, 4.1%, better than expected. We're seeing that trend continue from June of 2022 levels, where we've seen a decrease in inflation. When you look at oil prices, they were back up to over 82 bucks a barrel earlier in the session, about 80 bucks now. That's going to be the key for me, because is this the bottom of core CPI? Is this the bottom of CPI data where, hey, now it's going to remain, and that was the Fed's biggest concern, is that inflation remains sticky. We get to a point, and it's hard to crack through that level, especially when robust jobs market, the wealth effect taking place in the equity market at this point. It's hard to kind of push it back against that, right?
I agree. And actually, I just did a thing for CME this morning commenting on the volatility of commodity pricing.
Yeah.
Even as we're 3 years through COVID, but there's still a significant amount of volatility. There's still supply chain disruptions. You're seeing it play out in various parts of the commodity market. And if the one thing the Fed chair highlights is price stability. The economy can't be in a stable position without price stability. So I think that's going to be a big challenge moving forward. And the other thing that you brought up, I think it's a key point here, Tom, is the fact that the comps are going to get much tougher moving forward.
Right.
So we're seeing it coming off of 40-year highs right now. So it's pretty, the odds are a high probability that it's going to roll off. But at some point, those comps going into the fall or early next year are going to be a challenge for some of these data points. And we'll see how the market interprets that.
Yeah, definitely. And the optimism will probably reign supreme, as it always does for equity markets. But when you look at the earnings so far, about an 80% beat rate, according to FactSet. Really strong, but it's a low bar. We all know that. They lowered the estimates going into these. But I think the revenue beats is what kind of sticks out to me. That's one of the lowest levels that we've seen in years. They're still beating at about a 60-65% beat rate as far as earnings goes. But this is what I think the market needed and that's why they've taken a hold of it, is that maybe, you know, these corporations, the year of efficiency is coming to fruition, and the consumer's still out there spending, so it's not a downbeat kind of earnings season. GDP growth still above 2%. So maybe the market should be where it is. A lot of the bears don't think so, but you know, maybe the market should be where it is.
Well, the economic activity is stronger, I think, than any of us expected coming into this year.
Myself included, for sure.
I'm as well. So, you know, I thought for sure that by this point we'd see Fed rate cuts, and just because of the debt structure, which
Looney
was
Tunes
highlighted today by the downgrade. But
a nice RSI divergence there on SPY.
Tom, I'd say you're correct in the fact that, you know, we continue to see the beats. The revenues, you know, are getting a squeeze a little bit, but
let's see how Rite Aid starts reacting up here.
The market the last couple of weeks,
it's looking really strong.
The fact that you're seeing some of these names that have underperformed year to date, now
pulling back much at all.
So the expansion of the rally is starting to take hold to some degree, and so I think that is another factor to consider when you look at the price action. And as you pointed out today, we're seeing some of that rotation taking place, but it really started even a couple of weeks ago with some of these earnings now coming in better than expected in iPaper, 3M, things of that nature that are those stalwarts of the Dow.
Yeah, they were kind of left for dead at the start of the year, but now we've seen the breadth of this rally kind of take hold. Russell 2000 was up over 6% last month, so that's actually a positive for the markets, and maybe for you know, a little consolidation pullback. Maybe not a bad thing at this point. All right, let's take a quick break, Dan. When we come back, we're going to take a look at PayPal. The payments fintech company is only up about, what, 3% so far this year, and reports earnings after the close.
Yeah, I mean, it's definitely consolidating good.
Fast Markets coming right back.
Looking like it. It's going to want some new highs at some point today. VWAP so high too, even if it goes to VWAP. S&MP down 26, TUP down 27. Oh, Generac down 23. That's some bad earnings, huh? Oh, Camping World got wrecked for earnings. Dang, don't hit it twice. No. Hit it 3 times. Buy's coming back down here. Not ready for the rally. Dude, Upstart, man. This thing did not quit. I think earnings is gonna have to do it for it. Maybe puts for earnings on Upstart. Hebron's chart looks pretty good. Might be a nice opportunity on that one. Where it's at. Still have a lot of earnings to get through. Brad, back to VWAP. There's been a few different people pumping it, and a few different people that have been into it. Tune, that is. Yin Yang. Looks like it's maybe bottomed on the day. Still pretty early, but whether this is all the pullback it's going to get, I'm not sure. It's made a head and shoulders.
much people complain overall. You know, this is one of those companies that if people are talking about it, it's generally a complaint. So anything over 50% we consider fairly positive. DoorDash barely gets over that bar. Uber gets over it a little bit better. But overall, very similar across the board, across all these companies.
Yeah, it reminds me a little bit of an airline. You don't ever say anything until you don't like something about them. All right, great stuff. Great data as always, Andy. Appreciate it.
All right, have a good one.
Yep, you too. That's Andy Swan, co-founder at Likefolio, breaking down the data. Dan, I wanted to get your take here on it. You know, up over 70% this year. It seems like the optimism in names like this, it's not profitable yet.
Right.
And I think that's a real big concern for the street when it comes to that, where, okay, inflationary pressures are hitting the consumer from every angle. Is this one of the first things that the consumer drops?
Possibly.
Yeah.
Yeah, I think so, Tom. I mean, the expansion, you know, as we just talked about earlier in the show, is continuing to confound, you know, the Fed officials, let alone us, you know, that the economy keeps chugging along with some of the dynamics in play. But at the same time, yeah, I think we have seen what appears to be this extended expansion in activity, and particularly just getting back out there and everything coming back online. And it feels to me like we're getting closer to that maturation process, you know, and at some point now, moving forward, you would think that if we do see a hiccup in the economic activity, we start to see some recessionary type of environment, some of the data points start to shift, and the consumer not nearly as maybe optimistic as they have been recently, that I would think this would be one of the first things that would have feel the impact.
Right. So we've got an example trade here for you, Dan, that I came up with, and it's in the same diagonal family that you gave us earlier in the show on PayPal, but it's a little bit more standard, where I'm going out to that same August 18th monthly cycle here, so 16 days to expiration. I'm buying it in the money put. And this is a bearish sentiment example that we're looking at here. Buying an 87 put. And then against that, in the August 4th weekly cycle, so that option expires in 2 days, sell the 80 strike put. The one standard deviation move, the pricing is about plus or minus $7. I looked at this earlier. I probably would maybe change the strikes. But for this example and the setup of this strategy, we'll just look at it this way. If you're paying roughly a debit of $380, there's your risk, $380 per spread. You can see there the apex of profitability at or near that $80 mark that you're short that near-term put, and this is the same thing. You're buying a lower implied volatility on an aggregate basis, selling a higher implied volatility on the August 4th option. But on this one, you don't really lose that much profitability if the stock continues to move back down below 80. Give me your take here, Dan, on it's a lower cost entry point. It's $7 wide on this call diagonal. You're paying less than $4 for it. So the risk reward setup, pretty nice if you do get that move lower.
Is it a call diagonal or put diagonal?
Put diagonal,
okay.
sorry.
Yeah, I'm just making, okay, fair enough. All right, whoa. Yeah, I think, well, basically, you know,
let me get some,
from what I can
I got some
see,
451
Tom,
dailies on SPY calls.
You're buying a put spread to the downside. That in the money put, it's kind of mimicking getting short the stock, right?
They're crazy.
And you're going to capture, you know, the vol event once it comes off, and particularly if we go to the downside. You know,
I'll just take some profits at VWAP.
You know, basically defined risk parameters, which I like in this sense, because you know some of these earnings announcements have been so volatile and very outsized moves in the last couple of weeks. So I think that you know, if you want to play that, was going to play push back down towards that 50-day moving average, coming in around 76. You know, which I think is not out of the, you know, too far outside of what could possibly happen here. That this would take advantage of that.
Yeah, and that break even you see there, Dan, from the put diagonal that we have up there, break even near 88. So even if the stock doesn't move from these levels around 85, you still can be profitable. You do have some assignment risk on that short
Rats
option
below
going
VWAP
into expiration.
there.
And you do have that ability, if the market's open, liquidity
2410 is a support. It's
to
at.
roll that
If
short
it holds
80
that.
strike put a couple times, then you create that vertical, that bearish vertical at the end. But every time you roll that, you're expecting credits. That increases potential profitability, lowers that break-even point, decreases your risk on that trade also. But the debit that you pay is the risk on that example trade. That setting up maybe for a little bit of weakness, maybe you'll get that Uber reaction here in Dash in that example trade. All right, that's going to do it for us for this segment. We're going to take a quick break. When we come back, we're going to take a look at another fintech
Yeah, TUP moved
name,
back up
and
to
that's
VWAP.
Block, which is up about 20% so far this year. The company reports earnings after the close tomorrow. This one will be closely watched along with that PayPal. Fast Market will be right back after this short break.
Little bounce there on barbecue. 25 cents down 4 1/4. See if SPY can hang on to the support here. That projecting VWAP. Rad hanging above 2410 still. Eyes climbing up a little bit. All right, Rad's coming down a little more. Broke through that support. Broke through 24.10. Got basically $2 even. Potential support. Crazy pump on it though. I'm gonna take some profits here. Those calls. All right, good red day for selling some theta. Gonna update the Theta Farm members with a trade I just opened. Barbecue popping up through VWAP. Now pretty much flat on the day. That is neat. Okay. Here we go. Barbecue green 1.5 now. Look at that. Looks like it has positive beta all of a sudden. Some retracement levels in here, huh? There's 38.2. It's finding support on rad. RSI's coming down a little bit here. I want the move to VWAP. I don't know if I'm going to get it. Barbecue's green, 1.5. GME still down 5.2. Excuse me. They're taking more profits on those calls. I was up like 18% on him. Really doesn't want to continue. Come on. And Jim only. Yeah, I'm out of the rest of those calls. Frick. That sucks. And there's my trade. Considering getting more exposure on rad. Probably wait though.
On this one. Now, as far as the implied volatilities and the differentials that you're buying and
Afternoon,
selling,
Dave from the Bay.
August 11th implied volatility about 79% on aggregate that you're purchasing the 82 call and 70 put. And then in the near term, August 4th weekly options, implied volatility is elevated because you have that event risk. That's trading near about 136% on aggregate for those 82 calls and 70 puts. So just a really short-term option trade example here in block going into these earnings, where you want it to move that one standard deviation, but you don't want it to explode, because that's where you start losing money. But at the same time, you're giving yourself that nice wide range between about 65 and 90. It might be a little bit tighter than that, where you can still remain profitable on this type of trade. You'll expect that volatility crunch in the near-term options. You'll still see it in the options that you bought also, but the near-term options are more elevated on that one. All right, that's going to do it for us here today on Fast Market. Thanks to Dan Deming from KKM Financial for joining us today. But coming up next, right here on the TD Ameritrade Network, Next Gen Investing.
Brad's coming down a little bit more here. Barbecue's back down 4.25. Big range on barbecue today.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex
Jenny.
and Alex. We are seeing some pretty major weakness today, led by the Nasdaq down over 2%, but also the S&P here and the Russell both down over 1%. So the first real move we've gotten this week. So depending on your overall market conviction, I think it's just nice to see things finally moving.
Yeah, even I can't say that today is a nothing day. I mean, this is actually a real move. So for those who have been lulled to sleep by the quiet nature of the market, maybe today waking you up a little bit. 2.15% in real-time NASDAQ futures. S&P is down about 60 points. It's about 1.25%. It's not a massive day yet, but this is certainly something. This is something that'll catch your eyes if you're kind of looking at your phone every once in a while. You check that mobile app, it makes you do a double take. So it's good to see some movement, but of course it's the first real down day we've had in a while too. So we'll see where things shape up. A lot of this tied to some disappointment out of AMD, obviously, in terms of the move, but really this is a macro story. This is the downgrade in the U.S. that I think sparking a little bit of fear.
It feels like at this point the market was just looking for a reason to sell, because if you actually read into this Fitch downgrade, I don't know if I give much credence to it, but we'll be focusing, as always, more on the stock-specific news today, kicking things off with our upvote and downvote segment, following that, trading those names. Our football discussion today is one name that's holding on to gains for dear life. That is Marriott, which was initially up after its earnings. Now it's up only a modest 0.5%. Then we'll look at MGM ahead of its earnings. Last but not least, Rover, which I honest to God did not know was a publicly traded company until this morning, but seeing a nice lift on some better than expected earnings. That's, of course, that pet company that I frequently use. It's expensive, but gosh, it does fill a very important need.
You know, I didn't know that that was a publicly traded company either. I've never used the service. I've heard good things from those who have.
I rallying up for a little bit.
I kind of almost see it as like
had to
Uber for
stop
getting
me
your
out
dog
first.
walked by a stranger. Not sure I trust a stranger with my dog, but maybe that's a me problem, I think.
You know, it is kind of weird because you let a stranger into your home that you just like give them your keys and hope for the best. But we'll dive more into that story later on with George. But as always, we'll kick things off with our upvote and downvote segment. These are not recommendations, just names. Actually, all four of these names have earnings or are at least moving as a result of earnings. So we'll start things off here with Qualcomm, which has earnings today after the closing bell. This name has been somewhat of a disappointment in the semiconductor space. I know that's a pretty broad scope, but shares are only up about 18.5% on the year. We are expecting a more muted forecast for this company now going forward. We are seeing right now the street expecting earnings of $1.81 per share on revenue of $8.5 billion roughly. Global to smartphone demand, though, overall has been soft, which has weighed on this name. Last week, we saw a research firm predict that second quarter worldwide shipments for mobile phones fall 10% year over year. Taiwan Semiconductor has also echoed very similar sentiment last month, saying the smartphone market has deteriorated over the past 3 months. So with Qualcomm being a large supplier of the mobile market, we are expecting them to face then a couple of rough few months, which would then weigh on their guidance, of course. A Bernstein analyst earlier this week did reiterate his outperform rating on Qualcomm and reaffirmed his $135 price target, which does imply some slight upside from here, but admitted that Qualcomm's end market has not rebounded yet, saying that smartphones remain very weak, adding that the estimate for Qualcomm's September quarter revenue is around $8.5 billion. He actually expects it to be slightly below that mark. So while there is still uncertainty overall of the business, this low valuation could actually be attractive into this earnings event because we haven't seen the same degree of outperformance in Qualcomm. I think just given the fact that it does not operate like an NVIDIA or AMD, which AMD...
You're welcome, Jay from the Bay.
You know, you have to separate semiconductors out into the buckets of the products that they're tied to. This
Just
is
don't hit it twice, Dink.
Driven company largely.
Thank you guys for your thumbs up, by the way.
Demand,
1 o'clock.
Inventory kind of glut.
I'm just scouring all these red charts, trying to find something. We got 28 likes in a day. Well done.
Modestly. Big question is going to be margins, you know, with kind of that weaker demand in China, potentially some slower
GME's
growth
down
in the Android market as well. There could be downwards pressure on what is expected to be somewhat
down
flat
4 1/4
margins for Qualcomm, so that'll be something to watch. And then it does have exposure to things like auto and the Internet of Things that are expected to be somewhat resilient, Jenny, but we know that the macro picture is a little bit cloudy. I know there's new calls for sort of this no landing at all or skirting recession. I think it's too early in the game to be calling that, but we'll see. But that could be something to watch as well for Qualcomm. Next one on the list, though, is Starbucks. And this is an interesting name because, well, one, we've already heard from their earnings.
We have, and I would say this name showing us that we're seeing a reversal in some of these trends where domestic sales have been strong all year long and China sales have been weak. Actually, is the reverse this quarter. We saw that they're skyrocketing sales really in China specifically. Now, for the quarter that ended, it was reported yesterday after the close, they made about $9.17 billion in revenue, which rose 12%, but did miss expectations. Adjusted earnings came in around $1. It did top the expectations of 95 cents per share, but we did see some weakness on a year-over-year basis. Actually, that figure is showing on an adjusted basis, we did actually see growth, non-adjusted, less growth on a year-over-year basis. We have seen, though, improved productivity and higher menu prices. Operating margin as a result did expand from around 16 to 17.3%. Same-store sales, both in North America and international markets, were weaker than expected. We did see the rise overall of around 10%, weaker than the 11 forecasted. But the U.S. and China component of this company's portfolio make up now 61% of all of their same-store sales. Non-U.S.
Alright, another one to the Theta Farm.
24%, so that was healthy, but slightly below forecast. Their international growth was really fueled by this rebound in China, as that country's specific same-store sales did rocket 46%. And we did see their North America same-store sales only rise around 7%. That was well below the 8.5%.
Send out a message to you,
customer traffic
members.
1% as we are seeing really customers continue to get more extras like sandwiches, as well as adding different various options to their coffee, so then paying more. So it's not necessarily like the consumer is spending less. It just seems like at this point they're seeing less traffic, which is then leading to some of this weakness here. Although Starbucks shaking off what I didn't read as necessarily a super positive report with a nice 2% gain on the day.
Yeah, and this, I think, comes down to expectations. I think largely the bar was set pretty low for Starbucks. There was sort of an understanding of their recent struggles, and I think it is really this, at least in North America, which is still about 3/4 of their revenue, this is more of a staple company than a discretionary company now, although it's still priced like discretionary, and you could make the argument that we could save a ton of money consuming caffeine at home or in the office. But, you know, Jenny, I think the numbers really go to what we were talking about yesterday in Fast Market and what you talked about, which is they're not really getting new customers. They're just getting customers to spend a little bit more, or in some ways just squeezing a little bit more out of the customers through higher prices or maybe reduced rewards. Because the actual number of transactions in the U.S., same-store sales only went up by 1%, but the average ticket price up by 6% to get to that 7% growth year over year in same-store sales. Opposite, as you said, in China, in which they saw transactions leap 48%. That's that reopening really taking hold now, at least in terms of Starbucks. But the average ticket price, so the amount actually spent in China, went down by 1%. So very interesting dynamics as it's a little bit more mature, more saturated market here in the U.S., possibly a return to normal over in China.
And interesting because we saw a name like McDonald's knock it out of the park last week, so just showing that we're seeing now winners and losers in the food and the discretionary space. Our next name, though, is PayPal, and PayPal lowered today by about 3.5%. They have earnings today after the closing bell. The story will be all about margins when this company reports. The street remains pretty focused on the various ways that PayPal processes its payments and the financial differences between them. So while consumers are very familiar with PayPal's branded checkout button on various websites, the company also has been focused on processing payments in a more behind-the-scenes fashion in other cases, as that part of its business has grown on a relative basis, although it's still weighing on its overall transaction margins. A Barclays analyst said he expects actually continued pressure on some transaction margins relative to a year ago, thanks to the strong growth of the unbranded business as well as other factors, including some product migration as well as the mix of domestic versus cross-border transactions. He did say that he expects these headwinds to intensify in their third quarter before beginning to abate thereafter. So we are seeing the street right now expecting earnings of around $1.15 a share, adjusted coming in around also higher on a year-over-year basis versus the 93 cents reported a year ago. Revenue expecting at around $7.3 billion, also up from the $6.8 billion reported a year ago. So expecting some growth here. This name needs it because it's only up a modest 2% this year, down about a 1.5% now into this report on the week, but down, 3.5% on the day.
Yeah, this is a name where the things that you're watching are a little bit different. Of course, margins is one of those kind of great equalizers, always an important part of the conversation, as you mentioned, but total payment volumes and, of course, the active account number will be something to watch. They are expecting some growth in both. They split out the Venmo and traditional PayPal. It'll be important to see those Venmo numbers as well. This is a barometer for the overall economy as well, so I'm excited for PayPal's report later on when we get to hear it, and especially any guidance updates that we get as well. Last one here on our list, though, is Etsy, a name that really thrived during the pandemic, and has sort of found its kind of niche where it's sort of this online marketplace for, I would say, ultra small,
they're just about to have earnings
type businesses.
And
an earnings play.
Always said to me is
whatever
the
you bought,
form of a
unless you sell it before
the
7th.
I've never ever purchased anything on Etsy that was on a need basis. It is definitely much more frivolous, I'd say.
Yeah,
and
had a nice
I was
breakout.
actually shocked to see this name's down 20%.
You'll probably get a little rally
this
before
year.
earnings.
Not getting any love from the overall
The market doesn't just keep
strength.
selling
It is
off.
set to report its second quarter today after the close, with slowing consumer spending at the front and center of focus here. The street is expecting earnings of around 90 cents per share, representing a jump of 77%. revenue $617 million roughly. Over the past 3 months, though, Etsy has seen some substantial cuts to its estimates. Its earnings estimates specifically have been revised down 7 times compared to the 3 upward revisions, while revenue estimates have seen 16 downward revisions versus the 4
slowly
upward
climbing
revisions.
up.
Shares have been cratering this year, like I said, down 20%, despite the fact this company has beaten its expectations for its gross merchandise sales in its first quarter. We did actually see some analysts say the company's revenue growth has appreciably been reduced, indicating some market saturation, while the company has also taken on some more debts pretty substantially over the past 2 years. Despite these challenges, though, Etsy has remained cash flow positive and generally profitable, although its recent quarters point to holding steady, less substantial growth, which, like you said, after watching this
not much of a move yet on the market. Still very sleepy.
Here reset. So this name, though, just clearly underperforming the market, down this week, lower today with the overall market. But I had to actually check my Thinkorswim platform like 3 times, make sure I was seeing that correctly, because it's just rare that you see a name down 20% on the year in this market.
No doubt, and this is something where you're going to watch a couple other things too. Want to see the number of buyers and, of course, number of sellers on the platform. But take rate has really been the focus for Etsy as they sort of taken this Starbucks approach. We're trying to squeeze out as much as they can from each transaction, as opposed to focusing on kind of a scalability of it. I think of that as sort of a last card to play type of a move for a lot of these companies, comparable to Netflix cracking down on password sharing. You do that late in the growth game, not early in it. So it could be Etsy kind of admitting what you're talking about, which is the saturation of the marketplace. But that, of course, as that take rate goes higher, de-incentivizes sellers from wanting to actually be on the platform, potentially seeking other alternatives. So that'll be something to watch on this one, Jenny. But gross merchandise sales, which is like the ultimate figure that matters because they're getting, a piece of each of those transactions, expected to fall slightly. That is not the numbers that they want to see if you're an investor in Etsy.
And I will say they do compete in some aspect with Amazon.
Ace, when are you going to join my Theta Farm membership?
I wouldn't want to go up against Amazon because Amazon typically
Start
pays
selling some premium
and creators very well. When you're a name like Etsy, it's difficult to compete just naturally with that scale. So we'll be diving more into our 2 upvotes today, those being Etsy as well as PayPal, both names reporting today after the closing bell. We'll be looking at some technicals as well as some example trades in both of those names. Stick around. Next Gen Investing. We'll be right back.
How's our rad lad doing? Coming down some more, see if we get any kind of support. This diagonal trend, so beautifully made this morning. Yeah, but the other one won't benefit you unless you I mean, of course you'll have clout, but other than clout, it won't benefit you. Other than learning, you could just paper trade it. Since you have a paper trade on your platform, I'm assuming. S&MP down 27%. You want to get some puts for Upstart's earnings. Starting in Webull? Nice. Yeah, Webull has paper trading. On your left-hand side there. It's called paper trading. Right there. Weibo. Right here. one of the tabs on the left. Then you can choose a layout. Getting into options, I would do options trading, paper trading right here. And follow along, see how it works. Very passive, it's not something you have to like actively do. Alright, I'm sending another one to the Data Farm members. Opening up lots of positions today. That's good, because we've been kind of sitting around waiting. Stuff hasn't been ripping, so we're just having to wait for the premium to decay. And being around earnings now, it's kind of zigging and zagging around earnings. Master.
This area between about 71 to 78. Price bounced around between that for quite a while.
Yeah, I traded Palantir back in the day too.
We saw a lot of heavy trading in this area, so it's a point that price needs to work its way through to resume some kind of trend here, because really right now things are still slightly pointed upward. If we look at our moving averages, they're still sloping upward. At least our short term and our medium term, our 21-day and 63-day exponential moving averages are still mostly sloping upward here. Our long-term average, our purple 252-day, speaks to kind of the longer-term downward trend we've seen in this name, kind of reflects our long-term downward trend line. So we're still below that important technical marker here. Another thing that stuck out to me about this chart is that as price was making new relative closing highs, RSI was trending downward here. See, we were sloping downward, price was sloping upward. That's not really what you'd want to see, is momentum to be slowing down as price is climbing. That's what's called bearish divergence there. So not necessarily a head for the hills type of moment here, but not really what you'd want to see heading into earnings if you were bullish. Ideally, you'd want to see people piling into the stock, rising prices, much like what we saw with semiconductor names recently ahead of earnings. But here we can see that that's not the case with this name. If we look a little bit closer at our relevant support and resistance, to the downside, we've got our yellow 21-day exponential moving average roughly in line with our trend lines beginning from those lows, those yearly lows we saw near 59. So we've got a bit of a confluence right around the 72 level, and just below that we've got our 71 level that I mentioned previously with our green dashed line. To the upside, if we can break out of this trend line, once again, that's really the point to watch, and break through this volume node near 74, the upper part of the range, the $78 level, this red dashed line, that would be a point to beat for some kind of uptrend to resume here, but really not looking fantastic for the bulls as we head into this earnings announcement here.
Yeah, Rick, I think that's really perfectly put, because things have been lackluster pretty much all year long in this name, and even into the end of 2022, really. We haven't seen the same outsized strength we saw back in the pandemic in like 2021 when this name was on an absolute tear. So with that in mind now into this earnings event, Alex, walk us through then a more bearish leaning example trade, just looking to lean into some of the recent weakness that Rick pointed out.
Yeah, sure thing. Looking at buying a put calendar below the market. So Jenny, this is a pretty easy strategy in terms of customization. Someone with a different opinion could certainly adjust it to better fit theirs, but went to the 65 put calendar, selling Friday, buying next Friday, 25-cent debit. So this is sort of that idea of aim small, miss small in the event that it doesn't go towards the strike. But you got to be precise. The closer it is to those strikes, the more likely it is to be a profitable trade. So you take a look at the risk profile, what you'll notice is that mountain-like spine that peaks out the apex of the profitability graph at that 65 mark. But again, I would say that the critical piece to this is it's 25-cent debit. $25 is different to different people, but when you're looking at this from a trading standpoint, objectively, this is on the smaller side of the example trade illustrations that we look at in terms of total risk. And so bear in mind, though, it's also probably more on the lower probability side, is it needs a move toward the particular place to be profitable. Many of the strategies that we look at, Jenny, need something not to happen in order to be profitable, and those are two very different scenarios. But this one, as I said, very customizable. You got a different kind of profit target, or different price target, I should say, for the stock post earnings or at any other time. You could
I'm gonna sell out some more Tesla today. It's not a really good day to sell since it's down, but
to better reflect that
I've been scaling out.
But straightforward, 65 week over week put calendar in PayPal, just outside the market maker move, leaning into some of this weakness in the overall market, some of the technical weakness that Rick had talked about, seeing an outsized reaction potentially post earnings.
And now looking at another name with earnings after the close today, that is Etsy. Although Etsy, I will say, for all the doom and gloom we just discussed with PayPal's chart, Etsy's chart looking far worse, down over 20% on the year here, Rick.
Etsy.
Yeah, and there's some interesting tension on this chart right now that I'll get into in a moment here. But to just describe what's been going on in this name, long downward decline off those yearly highs. We're down about 36% or so from that point. We formed this kind of W-shaped price action here, a double bottom near about the $81 level. We bottomed out near roughly the same point there. Since then, we've been trending upward. It was, once again, we had a bit of a false breakout, just like our last chart here. We broke above the $98 level, where price topped out twice around that point. We moved beyond that point. Today, we're falling off a little bit more. And I want to zoom in on this chart here because there's a lot going on. It'll be a little easier to see here. This is one of the things that illustrates how trend lines are kind of a subjective way of doing technical analysis. That's not necessarily bad. It's just something, it depends on the person looking at it sometimes. Some people might have drawn a trend line starting with our lows up here, this white dashed line. By that measure, the trend line would have been broken today. This steeper uptrend, we're having price significantly
coming down a little more here.
On the
See if
other
we get a
hand,
bounce here.
if you started your trend line after the gap began and where we opened up, we're kind of right on the money for it today here, holding at that support level. So neither one is necessarily wrong. It kind of just depends on your perspective here. That's why it can be a good thing to perhaps have a few different trend lines on your chart. Just keep an eye on them in case price approaches them. Then you could see some support or resistance. So looking at that, we can see now that there are a couple other technical areas to be watching on our chart. To the upside, we've got, as I said, our $91 level where price topped out multiple times. That's about where we had the lows from our gap downward just forming today as well. Not quite, a little bit above that point, but the $98 level would still be a potential tipping point to watch. Then we've got our highs right here to move beyond, then the 105 level. And the 105 level, looking over here, we can see that's where price closed at the lows here. Opened up around there, topped out around there. It's been a frequent stopping point for price. So that's the kind of thing that you can try to look for when trying to choose a strike price or a stop for one of your trades, an area where price has seen some congestion and frequent stopping at the same level. To the downside, our two moving averages here, yellow 21-day, orange 63-day, right on top of each other, near about 94.60, 94.70 or so. That's roughly where we touched today at our lows and recovered here. So that's another area to watch. Beyond that, look for the opening of the gap that was established here right around 90. So a few areas to watch there.
Yeah, and Rick, I think that's important. It doesn't seem as perhaps negative when you outline it like that. Obviously, it's all relative. This name has just seen a massive reset and lack of growth, frankly. So we'll have to be watching those results very closely. Appreciate the breakdown, as always, Rick Ducat, our chart master. So now in trading this name, Alex, despite the fact that we have seen this underperformance in Etsy this year, walk us through then a more neutral leading strategy if perhaps you think things will just sort of hang out right where they've been.
About 10% is what the implied move is based off the Thinkorswim platform's market maker move. One standard deviation range up or down. So think, $9.70, almost $10 on this $96 stock. So pretty wide window in terms of potential prices within that 1 standard deviation range. We elected for this trade illustration to go ahead and illustrate a iron condor strategy, which basically surrounds that range. So we went out to the August 4th expiration, which is this Friday, sold 85 put, sold 105 call, creating a strangle around that, both of those outside that market maker move ever so slightly, and then defining the risk by buying $3 wide wings. And so that $3 wide wings, if we collect a $1 credit, creates a strategy with a 2-to-1 risk-reward ratio, risking $200 to make $100, not counting for transaction fees. And you can see the break even way down at 84, which is about $12 below the current share price, and upwards of 106, which is just under $10 to the upside, both outside that market maker move, with a little bit more room to the downside in the event that this disappoints once again. You can see obviously what you would want to have happen is very little. You'd want a very limited reaction post earnings. This is very much going to be a trade that could be made or make or break around this earnings event, as we don't have a lot of time to the expiration date. With it expiring Friday, if you get a massive reaction one way or another, there's not a lot of time for it to come back into that window. And so this is one, again, you know the risk going in. It is risk defined, and that risk is limited to the width of the strike extent of the credit, which in this case is $200, not accounting for the transaction fees. Fading a big move, essentially, Jenny, in this one, looking for this implied volatility to overestimate the reaction in Etsy.
And 2 different ways to play earnings that are both after the close today. And I'd say also considering some of this market weakness, if you expect this to persist into the back half of this week. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignments. Now, coming up next, it's time to look at Marriott with a nice move higher after its earnings that has since lost some steam, but still touched all-time highs earlier in today's session. We'll dive more into those results coming up next.
Yeah, maybe. Brad's bounced on that 50% retracement. This is the only show that has a chart master. I think 18 is possible, yeah. But we'll see. I mean, it could find support here, this 20 level. This is going to be your first support area. See what the market does. Might come down a little bit more tomorrow, or bounce around a little bit and then probably bounce a little bit by end of week. It just depends on what SPY's doing. Today might have one more day of continuation. Let's see, tomorrow's Thursday. Yeah, and then maybe some profit taking for the bears on Friday, which will cause a little rally. But I don't know, today's not over. Could have a big rip up today. Still, I mean, you could. It's been very weak though. Yeah, if 20 breaks, really this trend here, I think probably this next one here, 18 and 15 and 10. Hold it past earnings.
That rally starts to fade here a little bit, although still clinging on to a slight gain for dear life at this point.
You know what's funny about that too is it was like at its highs when the market was on its lows of the day. The market itself has trimmed about a quarter of the losses just since we were on air at the beginning of the show. Yet Marriott is kind of sluggishly working its way to unchanged. So that's an interesting dichotomy to watch. But this is a story of higher revenue per available room, it seems, Jenny, and not only in the U.S., which was modest, but internationally, particularly in Asia.
Right, and I think that right now that we're seeing this international expansion with tourism companies collectively is something that's been read pretty positively. We did see their sales growth of around 14% year over year to $6.1 billion roughly. This did beat street estimates at around just over $6 billion. Comparable system-wide constant dollar RevPAR, though, did increase 13.5% worldwide, 6% in the U.S. and Canada, and like you said, 39% in these international markets on a year-over-year basis. Their total expenses did rise 13%. Adjusted EBITDA for the quarter was also improved from a year ago at around $1.2 billion. Operating margins for the quarter did expand on a year-over-year basis from around 17.7% to 18%, with operating income surging to 15.4%. We did also see their adjusted earnings beat expectations, and the company did say they added around 33,000 rooms globally in their second quarter. Also announcing they repurchased 5.2 million shares of their common stock for around $903 million. But like you said, the story really, I think, is China here. As I did mention, the Greater China rebound came quickly once these travel restrictions were lifted back in January, with their second quarter RevPAR now surpassing their pre-pandemic levels. Now, the CEO said while conditions have changed or could change rapidly, booking trends remain very solid. They're raising their full-year rooms growth and earnings guidance and now expect to return around $4.1 billion to $4.5 billion to shareholders in 2023. I think given some of the weak guidance we've gotten from names like JetBlue, Alaska Air, Southwest, Norwegian yesterday, I think this is refreshing to see. That doesn't mean that's necessarily the case across travel across the board.
Yeah, and I think it also reflects the trends that we talked about, which is that travel has looked abroad and less so domestically in places like Europe, and return to travel in Asia has really dominated the story. And you see that in these numbers. You talked about the international numbers being really a bright spot. Europe up 24.5% in RevPAR, which is revenue per available room. That's higher than the second quarter of last year, of course. The Asia Pacific region, if you take out China, was up 47.6. China alone was up 125%. These are massive, massive increases, but only 6% in North America, which is a huge, obviously, driver of revenue. So they don't necessarily want to see North America turn into a sluggish region, but if it's going to, huge numbers elsewhere is okay too.
Yeah, in this company, I think that's such an important point, and also the scale of Marriott is also so important. We so often compare them to Hilton and Hyatt in the publicly traded hotel company sphere, but this name is actually larger in terms of its hotel footprint than both of those names combined. So Marriott is absolutely massive. They have so many different brands that aren't even Marriott, that you wouldn't even affiliate necessarily with a Marriott. So I think this read is really positive, not only just for Marriott, but for then its hotel peers. Not seeing the same love today in those names, but I think this is a pretty solid report from them, all things considered. This name has risen about 40% on the year. It is up 51.5% off its low. And like I said, new all-time high today. And I always have to check that twice to make sure it's not just a 52-week high. Did touch that all-time high earlier in today's session.
And even with that, you now actually have Marriott in red territory on the day. So objectively, higher guidance, strong numbers. This, I think, is safe to say was a strong report. Would you agree?
I completely agree. And finally, we're seeing that actually reflected in its price today.
Yet the stock is lower. I know it is at all-time highs effectively, and it made a new all-time high. So I guess that's the kind of saving grace component. But if good numbers aren't even good enough to get your stock higher, what happens if you have bad ones? It's certainly interesting. From a trading standpoint, though, Jenny, I think the fear of missing out rightfully is probably to the upside today, but it's not really like feverish buying. It's pretty sluggish trading activity here today as the stock sort of straddles this unchanged line going back and forth from red to green.
That support, see if it holds 50% still.
At it for too long, probably hurt your eyes. But looking at it here, Jenny,
that's a pretty big sell-off actually from the rally.
Is the current share price. I thought that's selling a put vertical below the market. I think this is more a reflection of the level of fear of missing out. Probably.
Yeah, $2 is like right at the 61.8%. So maybe that's what it's looking for.
Buy this thing today. It's kind of just like, yeah, it was strong, but we kind of knew it was going to be strong. It was already sort of priced in. The stock's near all-time highs, made new all-time highs on the kind of the spike move this morning. Looking at some 200, 195 put vertical in September. We don't have earnings now to worry about for a while. Going out to September 15th, a little bit over a month and a couple weeks away. Break even if it's filled for $1.25 would be $198.75 on $375 in risk. If we look at the risk profile, classic elongated Z in which we start in that max profitability zone. The risk is to the downside. Max risk is below 195. Break even, as we said, 198.75. Pretty straightforward, neutral to bullish strategy. Leaning into, I would say, the sluggish move here today, but also a high probability trade that has a little bit of cushion in the event that this stock loses some ground over the next month.
And like you said, if we see strong guidance, strong numbers, and some pretty positive commentary from management, and we're still not able to see this nice move today higher hold, what does this mean then for the rest of the week with some of these names reporting? And I think that begs a very good question. So that actually is a perfect segue into what we're talking about next, which we're not moving too far away from Marriott. We're looking at MGM Resorts ahead of its earnings today after the closing bell. Kevin Green will have the breakdown for us on what we can expect from this company coming up next.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our Portfolio Management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com.
Thanks, Psych You Up. I feel pretty profound. It's coming out of me now. It's a COVID type cough. Just lingering. Yeah, it's kind of it's fine though. It's not like I feel sick, thankfully. Grateful for that. It does. Yeah, maybe 50%. I mean, this seemed like I wanted to hold too. So I'd be waiting for a break of some of this resistance. and potentially a little inverse head and shoulders here. You've got a head, shoulder. I'm going to build a shoulder over here. I guess they think it because of him. He's on some of the paperwork as an interested party. His name is listed and his company's listed on Barbecue's court filings. And then also his Teddy book company, they think is kind of a placeholder for a larger Teddy brand called Teddy Holdings, because the address is the same, and that larger Teddy Holdings company has trademarks and trademarks to sell. Not trademarks, yeah, trademarks for selling all sorts of stuff, and a lot of the items cross over with Bye Bye Baby, even Bed Bath & Beyond. I think those are the main two reasons if you take out any tweets or tinfoil. Yep, there you go. I built a little shoulder. See if you can build it. Build it. We will come. Falling back into my same options I sold this morning for 400% less. Whee! This IV is crazy. Oh no, these are different options, never mind. What? I can't get a fill. That was crazy. I had to hit the market. I got the 3 calls for August. We'll see. They're expensive. Not too proud. Given it's still up a lot. Oh, I guess I did get filled. It just lagged. Wait, what? Broken. Weird. It says my filled price under my orders, 30 cents. Then it says my cost basis is 25 on my position. I gonna buy more GME? No, I'm not gonna buy more GME here. Not to say you can't play options on it. You know, there's opportunity to make money. Options premium has come down quite a bit, though, unfortunately, for theta farming. If I were looking to go long, I would add some at 20 bucks, but I'd be very patient. This is like the first down day on the market, really, and you know, this could have been the top here, this engulfing day. Top for many, many months. They got their catalyst with the downgrade, and bears are starting to get control. A lot of institutions are buying into Pac West before earnings, or no, they already had earnings. No, they haven't had earnings yet. Yeah, Rover's up 14. Gen I. See, the SPY bounces have just been so weak today. There's nothing there. You have this inverse head and shoulders, but it really needs to break that neckline for it to be validated. So inverse head and shoulders on RAD is kind of failed. Could still happen, but so far it's just still building this head at the 50% retrace. It's starting to slow down this aggressive selling.
Point was like, you know, $15 a share, so it's way off that. Still a $1.1 billion company, massive market cap.
Oh,
just
Weeble sucks.
In terms of the
I don't know why it doesn't show earnings right anymore.
It's really genius. It's still to me completely bizarre. I've let like numerous strangers via Rover into my apartment, but hey, it's relatively affordable, and you can see like reviews of who you're letting in your home on the Rover app. It's very user friendly. So I'm a huge fan. I've used this very frequently. But here to tell us now more on the stocks move today. 14% jump. I'd like to welcome in George Tillis, senior markets correspondent for the network. So George, walk us through what's leading this upside today. I'm super excited. This company is publicly traded, frankly.
Yeah, I didn't know myself, Jenny, that was publicly traded, but I haven't used their services, but I certainly have heard of the business, and it seems to be very popular, and I think that's one of the important factors involved, especially from an investment standpoint for Rover. But, you know, it's everything from training services and daycare services, also grooming services. And effectively, I mean, it's a business that seems to be growing in terms of sales, gross bookings, but also total active users on the platform, which right now, based on last quarter's results, is about 1.7 million. And I think overall, you have to consider it as sort of a marketplace, an online social environment for pet owners. So again, popularity certainly matters for businesses like this, as well as, again, whether or not the company is growing its sales, which apparently, based on last quarter's results, they are. I mean, they beat the estimates, coming in around $58 million, beating the 52 million estimates by quite a bit. And that's a 35% growth rate year over year for sales. And adjusted earnings are profits, in this case, 3 cents. Versus the break-even estimates. And last year, for the same quarter, they broke even as well. Now, Alex alluded to, yeah, it was a $15 stock. It hasn't been public very long. It was a reverse merger via SPAC back in 2021. It did go all the way to about $15 or $16, and subsequently it has fallen since then, because you have to consider around the February 2021 time period, there was a big rout in the SPAC IPO companies as well as technology names that really hadn't proven themselves from a financial standpoint. But it looks like from the standpoint of Rover, this is a business that seems to be manifesting into not only popularity but sales. Their gross bookings, like I said, increased about 20% year over
Joining
year,
Mumu?
and they actually raised their guidance for the full year, including next quarter, to 62 million.
Yeah, use
Estimates for sales.
someone's
Now, to
link.
compare
I don't
that,
have a
it's
link
4
for that.
million more than this quarter they reported, which also beat by 6 million.
Use someone you like
And of
ZipTrader
course,
or I
looking
don't know,
at
whatever you like.
the full year for 2023, it's over 220 million in terms of their estimates for this name.
So how does that kind of shape up for valuations then?
Spy's
It's still,
coming back
what,
down,
like
man.
five,
Wow.
almost 6 times price to
See if we can get
sales at that
another
point.
shoulder over here.
Is that reasonable for a company with
Bounce
this
on.
much potential growth down the line?
Brad's holding up there, which is good.
Well, I think from a price to sales standpoint, you could say that it may be still undervalued considering a 35% growth rate from a sales standpoint. But at the same time, you have to consider maybe some decelerating sales, but that's not all bad as long as there's margin improvement for the business. In other words, as long as earnings start to project higher, sales growth can actually decelerate and you can actually see the stock price move higher. I think it's important here to note that if you look at the coverage that the company has, Goldman Sachs, Morgan Stanley, both of those companies are covering the stock with a $6.50 and $6 price target respectively. I think that's also very meaningful because it has institutional support. And I think these companies wouldn't provide support from an analytical standpoint to a company like Rover unless they actually had a meaningful business that was growing. So I'm not saying it's a buy here. What I'm saying here is that there is some visibility now from an earnings and revenue standpoint that there's enough coverage from an analyst standpoint to feel a little bit more comfortable in owning in the stock. Last, I'll point out this: they do have about $250 million in cash, which is about 25% of the market cap. They are again expected to generate an adjusted profit for the full year. And at the same time, what I did notice is that their sales and marketing expenses were down last quarter relative to the same quarter last year. That's a good sign. That gives you an idea that they're generating more sales and that are also generating lower cost per sale. And I think that's important here if you're an investor.
Looking back now, obviously this one becoming a publicly traded option for us as investors via SPAC, reverse merger, as you said. That hasn't been a friendly marketplace to investors. We've seen so many of those names,
right.
Even if they were, kind of strong initially, kind of the baby in the bathwater situation, everything getting thrown out at once. SPACs just haven't performed well. Is it going to be a situation where the better companies of this will be able to survive?
Here you go, Brad.
That,
Brad's bouncing up a little bit
going
now.
to be something that plagues them
Getting your right
from
shoulder
a
on there.
standpoint?
Well, so I think at the end of the day, how the company generated their initial capital funding really doesn't matter, Alex. It really comes down to the business model and whether or not they have visibility in their
Yeah, it's
earnings
already starting
and
to break
sales.
this trend.
And I think that's the case here for Rover. I mean,
Right
there's
here.
a lot of SPACs that have gone bankrupt. There's a lot that are trading near bankruptcy levels, and they probably won't survive. Too many to mention in this segment, but at the end of the day, there's something meaningful here from a business standpoint as well as earnings and sales, analyst coverage. And I think if you look at the chart, the weekly charts going back a couple of years, you're going to see that there's a trading range resistance around $6.50. So I think that's an important level, at least from a trading standpoint. Maybe in the next couple of quarters, if it breaks above that might pull in some additional institutional investors.
Yeah, George, it's a really interesting company, and I would say a much more affordable alternative than, say, like boarding your pets, which I know can be super expensive. So this is always like a godsend to me. I cannot speak more highly of this name, so I hope for that reason we do see this company continue to grow and continue to expand, like you pointed out. But we will leave it there. A really great breakdown on Rover today. George Tillis, Senior Markets Correspondent for the network. That also does it for Alex and myself for Next Gen Investing. Coming up next, we have the Watch List with Nicole Pedalides.
I think you'll get under 20. BBBYQ. Still building some support here on RAD. What's TTO doing? Oh yeah, look at that. This must not be on my watch list. Oh, it is. Yeah, there it is. Yeah, that's nice. 14%. Got earnings on the 7th. Yeah, 14% on TTO. You're right at resistance. The resistance. Brad's still building up that right shoulder a bit. Broken this trend. Gonna break this one. Really, it's made a big cup here. Now we're getting the 50% retracement for the handle. So this might not play out today, really. Seems like it wants to climb back up to VWAP though. Before end of day. Our pill is able to fully destroy cancer. Interesting. Got some more daily calls. On SPY, we'll see. Front running a little bit. It's climbing up there a little bit. Loss is down 2.3. BTRA is up down 7.5. Barbecue's actually flat. Maybe he's down 4. Rite Aid's starting to move up a little bit. There we go. Broken that resistance now. See if we get back to VWAP. EBLT, huh? Traded this one before. Breakout 40. I like that trade. I like that Bubblicious. Alright, Jay, thanks for cruising by, man. Hope you had a good day too. Yes, please do stop by once more. ASMC. What's SNNP doing? 27% down. I'm like tempted to dip by this thing at some point. I don't know why. It's like my barbecue play that actually worked right and got uplisted. PTO did just go crazy, right, Cameron? 20 cents on there. That's the break we're looking for. $1.80. Say it looks good. 26%. Let's see if it can maintain. See if it respects that as a support on a pullback. That's the best test. You don't always get that gift, but pretty nice when you do. Oh, Fidelity. Fidelity actually gives me a warning. That's nice. It says deficient. Issuer failed to meet NASDAQ continued listing requirements. That's just because it's below $1? Or is that something new? Oh, it's jumping on NASDAQ extension. NASDAQ extension to regain compliance. Through November 20th. That's the catalyst? That's the only catalyst I need. Never really built a handle on this cup. Here you go, rad. Climbing back up to VWAP. So now it's broken that one. That is neat. Now let's see if this prior support turns into kind of diagonal resistance. Probably not. I'm not gonna mess with TTO. Does look nice though. I got stopped out of my SPY calls. Put like a 8% stop loss on it. Live to fight another day. I was front running again, remember? So. Fidelity's not letting me buy 0 date though. I'm having to buy tomorrow's. Kind of annoying. Probably better for me to be a little safer, I guess, anyways. I'm not sure if like my count size or what the reason for that is. GME is above VWAP there. That is neat. Rad slowly curling back up. Those calls we bought on this dip are up 50%. Moving quite a bit quicker than my Jan calls. Look how smooth that thing is. It's glorious. Oh, TTOO. Made it to that next resistance, didn't it? Yeah, it was down here, wasn't it? Not bad. Barbecue wants to go green, it might. It's popped up and down between green. People finally realized yellow is BK. Ah, let's buy it. Yeah, it does want to go. I remember trading this, I don't know, a year ago, a couple years ago. Did pretty well on Rad at one point. It was fun to trade. Contracts would get cheap and you could kind of just, I don't know, it's kind of a sleeper. You could have big moves. But the contract, like the option chain was never that crowded. Like there was liquidity, but it wasn't like, I don't know. Alright, if we get kind of a break up here, I'm gonna go back long on SPY. So it really respected that 50%. I mean, that was a nice retracement. Hopefully this is like a multi-week mover. That would be awesome. We could get shorts get put on notice. Yeah, there's no reason for it. No specific catalyst. See what? What do I have to do to not get ads? Turn off, what do I have to turn off? I can't remember. Oh, Java? Disable Java? Oh, I can add specific sites. That is neat. See if this works. Oh, let's check this out. Yeah, it worked. That's awesome. I can just block specific sites for Java. Like Seeking Alpha, those buggers. So Rite Aid coming back down here. Still within this right shoulder range. Could just be consolidating too. Got an engulfing candle there on the 5-minute. Probably come back down and retest here at least. Short interest, they say, is just over 23% of the float. Average daily volume for the stock is 2.1 million. As of 1:15, it was more than 43 million. That's what's up. Let's see what the float's 55 million. So we've traded the float by now, I'd imagine. There have been no news releases or SEC filings have been released by Rite Aid so far Wednesday. Earlier in the day, rival CVS announced it would undergo a company-wide restructuring initiative. That's kind of what I was thinking. It was simply to CVS, and that just picked up momentum and some shorts covering. In July, a report said that the drugstore chain was considering Chapter 11 bankruptcy to address liability related to opioid claims. We saw that before. Dish is my other one that I kind of hold like rad. Although this one doesn't have as deep a value. This one's in a lot better financial situation. But the cost of it is, you know, at 90s levels. And you know they're doing better than they were in the 90s. But kind of a dying business. SPY never broke out. Never did it. PTOO building some nice bull flag up there. Got a little room for VWAP. Barbecue's down 2.2. GME's just above VWAP. Waiting for SPY to start rallying. Proterra's up above VWAP. Be nice if this thing closed above that line there. Boss as well. Only down 2.3 now. Lottery. Nice, Bubba. Do you still have a position? Yeah, you did mention it yesterday. What the heck? Why is it up 160%? Oh, Oh, they're regaining compliance also? Wait, credit agreement? Lottery.com secures 50 million credit facility and restores NASDAQ compliance. Well, there you go. You got completely lucky. Or you knew. Well done, sir. I mean, let's see, was it yesterday? I thought this chart looked good yesterday, but it didn't end up closing very good. No, I didn't think it looked good, I don't think. No, I didn't really like it. But there you go. News wins. A nice move. 36 million volume. Well done, Bubba. BBLT looks pretty nice. Needs to break that. Kind of like TTOO is breaking that right now. They look kind of similar to me. I like TBLT because that gap though. It doesn't feel like you're too late. Mine's coming down a bit here. Has options? No. IEP running a... Yeah, that's interesting. It could go either way, right? That could be really bearish for shareholders. Uh-oh. Oh, yeah, broke that support. That's what stop losses are for if you're day trading it. See where it needs to pull from. 61.8 would be that $2 level. That'd be a nice spot to hold.
That push for Bitcoin to
the options I got in, I was not planning on closing today, so
I mean, didn't get to
good on it.
40,000, and the halving, which
I'm
actually
actually still up on
occurs
them.
in April of 2024, I believe, because I've been watching that because I've seen with my own eyes that the halving can be a catalyst, but for how much and for how long?
So each cycle it becomes less of a catalyst, frankly.
Right.
I think what's going to really drive in the long run, not just Bitcoin, but Ethereum and all the other asset classes, alternatives in the asset class, is ultimately real-world adoption, which means applications. And that's what Ava Labs is all about. Ava Labs is a software company in the blockchain space. We've been working with players like KKR, working with Deloitte Consulting, letting them to have access to the blockchain through our features and products and services so they can get the benefits and efficiencies from the blockchain technology. When everyone sees the benefits of the technology itself, then that's when you get a real inflow of investors in this space. But having the ETFs is also a good distribution channel to trillions of dollars. BlackRock is $9 trillion.
CMG's holding up way too well.
So with Ava Labs and your proprietary software and giving them tools and things that can help them along and make them believers in this, right? Where do you see the most demand? Is it obviously Bitcoin? Ethereum,
Lottery holding up good.
About the most, but there's Solana and Dogecoin and a lot of grayscale stuff and. I mean, where do you see the most demand?
The most demand is
230 coming up on 2:30 minutes per hour. This long play could still play out.
Bitcoin is known as the store of value, so that is what people think of as a use case. On the Ethereum
still building liquidity on that right shoulder.
On Avalanche or Vox, there's also various use cases. We're very much enterprise focused with helping traditional finance and other Web3 companies come across. So it really depends on where the use cases are. The ones that I see short-term jumps and bumps are these meme coins or these digital collectibles that don't really have an underlying use case.
Yeah. Oh, Shibu. Right?
Shiba Inu.
That was another one.
Shiba.
Let's
Shibu.
talk about a name like
Right?
PayPal.
Shiba Inu?
Right? I mean, in the news, and it's going in a report after the bell. It's been a laggard year to date, but has exposure. What are your thoughts on that kind of?
I mean, PayPal, great company, trades about 15 times earnings. That's roughly where the EPS growth rate is. So on the PEG basis, it's kind of fairly valued. Unfortunately, PayPal, Square,
GME
all
climbing
these
up
other
above
payment
VWAP.
fintech companies are all fighting the same issue.
Barbecue
For the
still
last
down
decade or so,
1.95.
call it, there's been so much cheap money out there. VCs and
Brad
splashy
Wick
IPOs
down.
has led to a gazillion competitors. So that's manifesting
See if it holds that
itself out in the
$2
numbers of
area.
PayPal and Square. They both have the same issues. Slowing
2070.
growth, decelerating top-line growth, and unfortunately pricing pressure leading
Somewhere
to
around there.
margin pressure. PayPal specifically, I think, reports tonight. I don't anticipate anything incredible out of it. They really need to set some long-term guidance in terms of hopefully they've been announcing that there's going to be new management, new CEO. It's been a while. There's no direction there yet. And in terms of earnings, hopefully they will give better guidance for the
insider
full year.
info.
You know, the
Nice.
Street's at 495 for 23. Maybe
Well
they pop
played.
it up to 5 or so. We'll see.
What about, when people are using Bitcoin to pay for things? I mean, you don't necessarily see it as a replacement for the U.S. dollar. I mean, the U.S. dollar is the world's reserve currency.
Look at Nicole, man. She'd get off a cruise.
There is this sort of DeFi action that's happening across the globe. What are your final thoughts? Should everybody have some sort of crypto, on their phone in a separate account? Because some of these things that they can't even get back in, and then they lost $500,000.
It's a great question because it's actually quite sophisticated to use some of this stuff in DeFi. Unless you are native and really appreciate how to use this, it's not easy for the average person. I think what DeFi's main purpose and what it's shown the world is potentially what the traditional financial system can be like if you adopt some of the technology and remove a lot of intermediaries and save costs and untrap capital. And that's really ultimately the benefit. In terms of the existing DeFi ecosystem, it's getting better. Unfortunately, we had some hacks this past weekend, but in general, it's showing the world what the financial rails could be like.
I didn't even know about the ones this past weekend. It's certainly, I think every day it's out, it brings more, makes people feel better about it. However, there's still a lot of people who feel uncertain about it. But I think the younger folks are much more likely to get into this for the long haul.
Trust me, your kids, my kids know far more about this than the average person.
It's wonderful to see you, John Wu, president of Ava Labs.
ETO coming down a bit. See if it uses that as support.
Thank you. Still
It'd be a pretty bullish entry.
At small caps, this performance year to date.
Either here or VWAP, really.
Caps, what we need to know. Our panel on CVS standing by, and take a look at winners and losers in the S&P 500.
Neg with inverse head and shoulders. Time frame. I mean, you had one here, kind of broke down there today. A shoulder and a shoulder and a head. Oh, this bigger one? Yeah, that's, you want to see that hold support, 1251. Yeah, I haven't given up hope on neg. I didn't want this far of a retracement. I definitely didn't want this little pump and dump, but I'll have my calls on it. Hopefully I have enough time. I'm liking this borrow fee on Rad. It's the highest it's been in a year. It's hung out around 1 to 2%. Went to 3% last month, and now it's at 10%, with available shares ever decreasing. This thing really could get crazy. Probably more so than Dish, as I think it's sold off much more. Just being that it's losing money. More reason for shorts to pile in. Stock market should have a public voice chat on each ticker. Isn't that what I am? Or you mean just like people going there chatting about it? I mean, we're almost there. You've got like Webull, you have a chat for each ticker. Tens of thousands of people screaming. GME's melting up still. See if SPY breaks this right shoulder. Rad's coming down. See what happens at 2050, 2060, somewhere in there. Like the sleeping giant just got woken up on Rad. I mean, look at the lack of volume for a long time. April of last year, last time we had any kind of volume. Or it's just a one-day thing. 2025 PayPal calls? Maybe, yeah. I mean, it's had a big bounce from that huge sell-off it had, right? Yeah, I mean, it's already had a big recovery. But it's still down at the lows. Look at that. I feel like there'll be better deals with the market selling off, but if your cash is burning a hole and you want to start getting some leaps, this is one that has definitely sold off quite a bit. Kind of right there. Probably wouldn't get them right now, given that they have earnings tomorrow also. Or is that today? I'd probably wait for earnings at the least. Larger head and shoulders for a giant. I don't see it, Poison.
downgrade, I think, is a bit of a concern, and not surprised to see crude tracking the indices very closely. I did want to point to, again, just kind of a bigger picture chart here to help us put things into perspective, and the declines that we've seen off the key area of resistance as well, 83,
still
this
selling?
85 area. We had Carly Garner join us this morning on the Future Show from D. Colley Credit
50%
Trading, and she was
is,
talking about how she expected to see some declines from this level.
32.49
If the dollar
area.
strengthened, it has. We're still above 50-day moving average here, Nicole, but a big
yeah, that
mover
head and
here
shoulders.
today nonetheless, right? Coming off on the day, crude oil as we speak down 2%.
All right, Ben Lichtenstein, thank you for all of that. And big news
Lichtenstein.
on that draw for oil. Thank you, Ben. Joining me right now here in person,
It looks like it might want to come all the way
is with us.
this
Chief Market
$2.62
Strategist at
area.
Investment Management. Thank
On
you
the
for
bigger head
being
and shoulders.
Here. Glad you're with us. I feel like it's such a telling time. We just got through the Fed meeting.
And that would also line up with this trend line. See if it respects this when it gets down there.
Are people worried or they're feeling positive?
You know, I think for the first time in a while, Nicole, people are actually feeling positive about the market.
Right.
You've got this great capitulation going on. I mean, for the longest time, understandably, after a year like 2022, people did not feel good coming into this year, but a lot of things have gone right. The economy, the data has come in much stronger than I think a lot of people
I haven't seen any capitulation yet.
Earnings results like we're getting now, you've had quarter after quarter.
Talking about Willis?
Better than expected data. I mean, the S&P 500's growing earnings this quarter as opposed to a negative 7% expectation. But at this point in the cycle, we need some consolidation. It's nice to see that we have, you know, I hate seeing red on the screen, but it's good to see the
Buy comes down and retests the low here.
And I think the key test for the markets is
You do have a head and shoulders there too, which it looks like it's breaking to the downside right now.
Right, and that's the whole thing, because you know, you may see some people taking some
That's
profits.
what chop and consolidating is.
And Tesla up 100% plus, Nvidia's 200%.
So if it does come down and test here,
and Royal Caribbean, those are up over 100%.
might be an inverse cup with a little handle for me.
AI boom has certainly pushed that whole group
There's the
higher.
fleshy.
So, I mean, I guess it behooves some people
Too
to
late
take
for
some
puts,
profits
otherwise I
off
would
the
get them
table.
right
But
there.
in the meantime, what's the
Or test of the
strategy
low.
going forward? Because you don't know what the Fed may or may not do.
Let's get a little retrace. I maybe have time.
A possible recession. You know, I've heard 60% recession. I know the Fed actually said their committee no longer really leans towards a recession. What do you see?
I've always subscribed to this notion of rolling recessions, that different sectors and industries in the economy are going to be hurt or feel a slowdown at different times. Whether or not the BLS
And a little retrace there. I grabbed some
I don't
puts.
think matters as much.
There's 450 dailies. I'll close them at the low of the day.
Are you finding opportunities? What do you do going forward?
Close some.
I've spent the past month.
Or I guess they're for
traveling to visit
tomorrow.
clients
Shoot.
in person, and the biggest thing I can express to them is don't chase the market higher. You know, we've always advised being fully invested and tactically leaning into areas that are working and leaning out of areas that aren't working. So where we are right now, after such a big run in information technology, these mega cap names, lighten your exposure a little bit. You still want to own those names because they're quality, $100+ billion of free cash flow, but take your profits off the table and cycle it down market caps. Small caps to me look incredibly attractive.
Right.
Some of them.
Especially if we subscribe to this notion that there will be a soft landing or not as bad as we think. Valuations for small look really good. They're benefiting from a sustainable capex cycle. You're seeing earnings finally turn for small caps. So for me and for my client conversations, if you're underweight to that part of the market, now is the time to be moving in because they're priced for recession. And there's a lot that can go right.
Yeah, and look, you know, sometimes we really see small caps being the best of the four indices that we follow. You know what I mean? And when you've had a weaker dollar, that's great for multinationals, and we've been focused on those a lot. But small caps can really provide a lot of opportunity. As you said, you do feel like they're priced for recession, and maybe they could be in a fully invested portfolio, at least one part of a diversified portfolio. When you say fully invested, you know, obviously you need a diversified portfolio. Are you looking at bonds? Are you looking at certain
GME's just been melting up here.
You mentioned rolling recessions. We saw it
3%
in housing. We saw it probably in energy.
TTO going.
Groups that really
retesting that high.
Than most. What do you tell them now
to break out.
how to have a diversified portfolio?
So I think a lot of clients I found.
Yeah, TTO broke that high.
Very, very short-term fixed income.
It's been volatile in this range.
Like last year, but either have you started to rotate
26,
that
what I'd say is the
money
next
back into
level.
maybe longer duration fixed income.
You can find support
I don't think rates are
on
going
that
to
resistance
go
here
too much
that
higher
comes
from
to
where we are.
SPY.
So get the opportunity to get capital appreciation in your fixed income portfolio. I mean, this is the first opportunity in a while you can do that. And you can also get a very respectable yield in investment grade securities and fixed income for the first time in 15 years. And then build out your equity portfolio, look down market cap. Sectors right now that I think look very, very attractive include healthcare. You've seen earnings exceed expectations, especially in HMOs and pharma, and staples, which are a little bit more defensive too.
There's a
but
green
you've seen pricing
candle.
power
It's not
hold
ready
up
yet.
as the consumers
I guess we're
able
at
to
15 minutes to
continue
power
spending.
hour.
So valuations there look a little more attractive, and as the market broadens, you're likely going to see those sectors benefit the most because they've been left behind for a better portion of this year.
You talked about capitulation, and now maybe
I don't know why. I don't think we've seen any of that yet.
Have we seen the lows of the market? I mean, maybe you can't say that we're going to head higher, but do you feel like the lows are in?
I think so. I don't.
Oh, man.
I find it, unless there's some exogenous shock that comes to
What?
the system, I
What
don't really
lows?
see a situation of getting back to October, especially
October.
because earnings, which are the
At least he's saying
lifeblood of the
October.
market, have held up incredibly well. So
He thinks we come all the way back to
people have
344.
jobs. Jobs are the lifeblood of the ability
That
to
should get
continue
stopped
spending.
out.
People spend, earnings can grow.
Let me ask you this.
People aren't
We
going
have
to keep
Fitch
spending though,
downgrade of
mate.
US debt. Our
They
US
can't.
credit rating goes down. I don't love that.
Running out of credit cards
There was a warning in the spring, and
that they've
I just
maxed
don't love
out.
to wake up to that. So now you have S&P, which did so back at, I think it was in 2011. Moody's is the only one that still has our AAA rating. Janet Yellen, of course, thinks it doesn't have any merit. It was arbitrary. Where do we stand with that?
I mean, I think you see the market
I'm
reacting
about to be
to
quick
it
on
today
closing
a
these. I
little
think
bit,
SPY's just
but
going to,
fixed income's
it might just make a
reacting
quick
more
move to it and
than
then
the
bounce like
actual news
crazy.
that came, because I don't think this was unexpected.
Right.
Fitch broadly, was out saying we're on negative watch. I think this was an when, not an if situation. But for the equity market as a whole, it just highlights that we're a little bit stretched right now, and that there are risks, and so leaning into quality, leaning into profitable companies, maybe this healthcare staples that we talked about earlier, those are places where you can feel safe if the market consolidates, but do well if the breadth continues to expand and the market moves higher.
Yeah, wonderful to see you, Matt Orton. Thank you so much. And what did you think the Fed does or does not do? I don't think I got that answer
I
fully.
think based on the current data we have, I think September's probably a pause, but the market, I think, has baked in that we're basically done.
Okay. Matt Orton, thank you very much.
Al
Raymond
has
James
made it pretty clear they're not done.
Management. Glad you were here today. Still ahead, we'll bring in
Calling
our
him a
panel
liar.
to discuss CVS. Now the stock is trying to turn around a dismal 2023. That year-to-date performance, a down arrow, down 17% year-to-date. We'll get into all the numbers coming up next.
What are you talking about, Bubblicious? CBLT rally? This range on SPY was not worth it. Risk to reward from here to here is just such a tight range. ETO, yeah, broke that resistance. Nice. I think I'm stopped right there. Yeah, I got stopped out. Too small. Small risk reward. Looney Tunes. Barely edging up. Kidding. Yeah, if it can hold above there, it's a nice little breakout level. 10 minutes to power hour. Pretty much, Cameron. Increased volatility will do that. Yeah, see, there's SPY's coming down now. One little stop hunt. We'll see if we hit the lows again and have a bit of a bounce. Yeah, TTO hit 24 cents there. Dish moved back up to VWAP. Alright, we'll see if SPY wants to break to the upside now. Still chopping around. I'm ready with calls again. An engulfing candle there on the 5-minute. Doesn't mean a whole lot in the chop, but could be a sign of a bottom. Maybe a power hour push. Huh? This is like our third or fourth choppy day in a row. All the moves happen extended hours. I like holding the position extended. Opening up at close, closing it at open. With futures though, that kind of messes with your margins. So you have to wait till after futures open back up at 6. Barbecue flat.
Move towards a vertical integrated business. When you think about the assets they've brought together with Oak Street
Probably
Health,
not wanting it yet.
Signify Health, and really thinking about
We had kind of green candling here, but
as a larger provider network. So to bring care, out of institutions
not
into
convinced
the
yet.
retail setting, into the home, all these things combined, is really, we think, is going to change the way healthcare is going to be delivered going forward. So I think from the long-term strategic point of view, CVS has all the right pieces in place. Obviously, we have some headwinds over the short term, but in the long term, you're still looking at a business that generates significant amounts of cash. I think they're guiding to 12.5 to 13.5 billion of operating cash flow. You still have a fairly attractive dividend yield at over 3%. And the fact here is, even with the revised guidance, you're looking at stock trading at under 9 times, on a revised 24 number. So it's still pretty attractive here in our view. Long-term strategy we think makes sense. And so we're still, positive on the share.
Yeah, and when you talk about
right.
the competitive landscape, obviously they've had some layoffs. They cut 5,000 jobs to reduce costs. But there is a competitive landscape, and, we talk about these pharmacy benefit managers and other ways of getting, there's 2 different areas, right? There's the things that you need for personal care and all that, and then there's the drug side of the business. How do you compare something like Walgreens or Walmart or even online competition? Is there room for all of these names to really do well?
I think the short answer is yes. I mean, we're seeing a lot of innovation happening.
SPY's not ready.
Here today. And we like Walgreens as well in that sense that changing the way healthcare is delivering, to the site, where site of care is being delivered. We think both are following similar strategies. I think, CVS has the advantage of having Aetna as part of its, part of the enterprise, which can drive more volume because of its membership. But I think in the near medium
Brad to
term, at
185.
least, there's a room for a lot of players to, try new things and bring new options to the market.
Maybe.
Right, understood. And what are the final thoughts here on the big picture of this group? I mean, do they
Hoping
face
it'll hold a higher
hurdles?
support
I
than
mean,
that,
there's a lot
actually.
of, concerns about the prices of drugs and things like that.
I'll probably be looking for more options on it tomorrow.
You're gonna have to eat the costs on whatever it is.
We start to get a pullback. I want long-term exposure to this thing.
Well, there's a lot in that question.
To cover the time
this
CVS ever happens again.
The benefit of being diversified, right? Things like higher drug costs, affect the business in different ways. If you think about
this might not have a continuation this week or next week.
Pharmacy,
But it
it's maybe
could
a little
too.
bit of a
Like
headwind for the health plan business. For the for the PBM, it tends to be neutral to positive depending on what kind of rebates you can get for your employer customers. So, I think the diversification here for CVS helps it manage through, even things like, rising drug costs.
This was the last time we had a
Charles,
move.
I'm glad you were here today to take a look at CVS for us. Thank you.
Could be something like that.
Of TD Cowen. Thank you very much. That's going to do it for us here on the watch list. Thanks for being with me. I'm Nicole Petalides. Every day, 11 a.m. and 2 p.m. right here on the TDA Network. Keep it right here. Market on Close is next.
World War Africa? What? You can trade the futures, like the currency there. That's going on. I think you can trade their currency. Maybe you can't. Maybe not in the futures. You just trade their actual currency. Jumia. That's African, I think, isn't it? Trade this. We're getting a war. Oh, it's German? Oh, German. What's the African? There's like an African e-commerce one. I thought it was Jumia. Big continent, though. Will it affect the whole continent? Probably not. World War Africa. The Africa world. Welcome to the world of Africa. A ride at Disney. Minutes to power hour and SPY is not shown its direction. No showing its cards. There you go. There's 3 o'clock. Might be getting a move in the last few minutes. Rad's climbing up there a little bit. Fine, looking for it. See if it'll squeeze out these shorts today. Oh, it's teetering. Yeah, I'm in it. Back in it. Okay, let's see. You're gonna put a stop on these guys again. Wash sale on daily options. Hmm. Got robbed on that fill. ECO WAS might invade with Western support into Niger and other belligerent countries. Huh. End-of-day scalps? Maybe TTOO? I don't know if this is going to have a move to the upside, though. Potentially Rite Aid back to VWAP. Buy back to VWAP. Oh, because it's showing me the wash sale price, that's why. Okay. GME even might be a good scalp. With SPY moving up.
We'll come back to it. Let's talk about one thing that maybe is still kind of working here for the disinflation story, and that is commodities. Crude can't seem to really get through 80 bucks. We'll get into the inventories report in some detail later on in the show. It's definitely taking a little bit of a hit that might kind of go against what you'd think if you looked at the actual draws in the inventories. We'll talk about that later on this afternoon.
Dude, it's
Finally, though, most importantly,
I can't get its legs yet.
today on chips, AMD's reversal. Gotta say, we kind of called it last night when George and I were looking at this number. We said it was very hard to see why AMD was going to stay so elevated on a fine earnings, but nothing even close to what NVIDIA gave us last quarter. And of course, the big gap on AMD's chart that you see there close to the center is not on their earnings from last quarter. It was on NVIDIA's earnings. AMD jumped 11% on NVIDIA's report, which included a huge lift to guidance. And we just didn't get that lift. We got more of a marginal shift higher. AMD says double-digit growth for some of their key business lines instead of high single-digit. Okay, that's a nice little update and a positive one. Tells us something good about the economy for sure, but does it justify the big AMD move that it got on NVIDIA? I don't think so. And so we're kind of closing that gap a little bit here. Not too alarming when framed in that context of just closing the NVIDIA-driven gap, I think. But nevertheless, seeing a percent drop in the S&P would be the first one in like 5 months, Kevin Green. Is that right? We haven't had a 1% drop since May. Is that what I heard?
It's been a while. It's been a while. We are seeing the VIX up at 16, and if you look at it from a relative basis, I mean, that's still, relatively low compared to what we've seen over the last 3 years. So I think right now, the market's really just trying to figure out, digest some of this data. I think the Fitch news yesterday was actually not a shock to the marketplace. I was actually looking at the market literally all night last night, and really Asia really took the brunt of that, especially when you're looking at China.
You're already doing 8 hits for us, man. Take a breather. Watch a movie. Because you're on the AMD call too.
I love watching the markets. So I think right now what we just saw is the international markets or the overnight markets definitely took the brunt of this. We are seeing a little bit of a pullback, but I think the pullback today is not so much the Fitch rating to the downside. It's actually the Treasury increasing its its debt issuance, if you will, especially for this run, and they're going to be doing that pretty much for all of the maturities moving forward here. So that's another issue that we are going to be able to see. More supply gets into the marketplace, rates then go up. But one thing you also have to just kind of notice here, Oliver, you had some really good charts in the open, but what I'm really looking at is the 10-year Treasury, the TNX, on a weekly basis. If you look at it on a weekly chart, approaching some significant area of resistance. I think you were alluding to that. You're also looking at the SPX at the same time on the weekly chart, approaching area of resistance, 4,600. We've been talking about that gamma pressure that is there. It's not too far-fetched to see a little bit of a
I might be doing that inverse cup here.
I don't think the market should overreact. At this point, it's really just waiting for Amazon and Apple, and really it's just going to be Apple to springboard us through, because we've had some pretty decent earnings, but we haven't had earnings that have really just skyrocketed this market to the upside. Guidance has been muted, especially when you're looking at technology sector. AMD really didn't shock the street yesterday. Really good update on AI, but everything else still seems like they're a little bit cautious. So I think right now, just a little bit of a reset. Looking at utilities, consumer staples getting a little bit of a bid here today. Somewhat of that safety trade. A pullback would be healthy. Coming back, we're testing that 20-day SMA right now for the S&P 500. Even if you pulled back to the 50-day SMA, it still would be a healthy pullback before trying to move up higher.
I really like that point about how we made such big leaps and bounds on the way up. There's probably likely to be support in areas 4,400 on the S&P too, where we kind of chopped around a little bit at the beginning of June or July and then bounced. So it's still in that zone where it's been so good, it's going to take more to really scare us.
Let me take this short break to thank you guys for your likes. 35 on the day.
Really hot print coming out here tomorrow. claims as far as actually that being low. That would be a hot print. You would also have to have the jobs number coming out on Friday looking really robust. And if it matches what ADP just showed today, then that could be a little bit of a concern. Now, yes, you should not trust the ADP reports. One, and they did change their methodology. Two, they are skewed to services rather than manufacturing. So they really undercut manufacturing and then overcount when it comes to services. But it's still a good gauge to be able to see. And I think if we do see a pretty significant amount of jobs being added, especially for mid-cap companies, small cap companies, companies that have 50 employees or less, then that could be another driver where it makes the market a little bit cautious. And then you can start having the conversation of Powell potentially considering another rate hike here in the September meeting. But you had some really good commentary coming from Goolsbee and Bostic yesterday, and that should have brought the market past that 4,600 level. It just could not. So we might be just a little bit exhausted here on the bull side.
I think it's maybe saying more about Fitch than anything, or the market's view of the rating agencies, when it looks like the ADP report this morning is having more of an impact on the market than the Fitch downgrade. So it suggests really some sensitivity kind of building here about the strength of our economy and what it's going to mean for inflation. JOLTS was very much in line, so we didn't get scared there, but the big ADP beat, kind of keeping that dollar bid, keeping bonds under some pressure. I mean, we're right there, really trying for 4%. So jobless tomorrow, then employment on Friday. Talking stocks for a sec, though, Kevin, where does AMD fit into this? You and I spent a lot of time talking about this going into it. We talked about it this morning. It wasn't a bad report, but it just didn't seem to blow the doors off anything close to what
little
NVIDIA
pop
did.
there. Almost green.
Yeah, if you look at year-over-year comps compared to what they've done in the past, I don't think it was a great report either. But I think the guidance definitely came up a little bit short, and rightfully so. They tend to try to measure themselves when it comes to their guidance. And once again, we kind of talked about it earlier this morning.
Looking for 26 cents as the next resistance.
Bar, and it's great that they set a high bar, but it's also not great if they're not able to hit, or if they're not able to continue that guidance moving forward. The marketplace, it's kind of like a kid in a candy store, right? You give them one piece of candy, they're going to want more. And that's one of those situations where, they shock the street. You definitely got the interest. When it comes to the marketplace, you're going to have follow through, because if they come up short, then that could spell, a pretty significant pullback when it comes to the semiconductor space in general. But yeah, AMD, I don't think, shocked the marketplace. And I don't think it was really a surprise, honestly, when you looked at
setting up just a
hedge
bear flag today.
$120 level. There was some put buying
getting
yesterday
some more red tomorrow.
Significant put buying at the 115 level to the downside. Could have been some hedging, but I think overall the data center side of the business is going to have to still pull through on the server processors. AI is not going to be able to pull this through in the next quarter or 2 quarters, Oliver. They're not even going to be ramping up production until Q4, so you won't even see that really hitting the top line until Q1. And in Q1, you're probably going to see some extended expenses on that ramp up, and then Q2 is when you're starting should be able to start to see margins widening out and really impacting the bottom line for AMD. So this is going to be a story that's going to take a couple of months, not a month or two for it to be reflected in the stock.
All right. Well, I'm going to pat myself on the back, because when we had our analyst on the other day, I said it felt like this is a this quarter thing. I get that it's going to take more than just this quarter. It's going to take time. But the market doesn't have room to give them that kind of leash after they gapped up 11% on NVIDIA. So it seems like today's a little bit of a wake-up day, right? It's like, okay, wake up a little bit here, bulls. Things aren't exactly perfect. Your AI story is probably a little bit embellished in its timeline, and your disinflation story may be about to get blown up if we get some hot data prints. So a fun one for sure. Kevin Green, thank you very much. Great work throughout the day here, of course. Mr. Green, our senior markets correspondent, joining us to connect the macro dots. Bob Elliott was the former
Tesla low of the day.
Dalio at Bridgewater. Now he runs his own funds at Unlimited. He's the CEO and CIO. Bob, welcome to the show.
Hey, thanks for having me.
Absolutely. I've been wanting to have you on for a while, so I'm glad you could be here, especially when it seems like we have a little bit of uncertainty or perhaps discomfort a little bit in some of the bull narrative here. Earnings, maybe not terrible by any means, but disappointing on some of this AI story. And then in the background, it looks like bonds are getting shaky. And I know that's where you focused a lot of your attention. So let's start there. What are you watching for treasuries? Are we really going to break out again in yield?
Well, I think general dynamic that we've seen is that the economy's been running pretty hot. We came in, there's been lots of expectations that we're going to move into recession. Those obviously haven't been realized. And in a lot of ways, what happened was the bond market kept pricing in that expectation of a relatively short-term recession, which kept a real lid on yields. That then paired with a dynamic where there was relatively low borrowing, actually secularly low borrowing from corporations and households and the government, which also kept demand for credit and bond supply relatively low. And so we're seeing a combination of both of those factors coming together over the course of the last couple of weeks.
If you get this inverse handle to build.
The economy is picking up, which is creating
or just a double bottom and straight rocket
to hold stocks relative to bonds. And then on top of it, with this incremental new issuance information coming from the government, we're seeing people starting to recognize the pickup in bond
TTO holding up well.
And so muted is behind us rather than ahead of us. And that increased bond supply will continue to put pressure on rates. You put those things together, and the bond market's looking really at risk right now overall for the picture, looking for the next few weeks.
You wrote in a Twitter thread, I think it was from earlier this morning, that bonds present one of the worst risk-reward trades right now. And so to kind of break it down from what you just said into two pieces, increasing demand to borrow and softening demand to lend. Those are your words from the thread. The first part there, increasing demand to borrow, speaks to the strength of the economy?
Yeah, and in particular, what we saw was really limited borrowing from households and limited demand to borrow.
Ops bond bear case.
As the housing market meaningfully slowed in the back half of 22 and the first couple of months of 23. But that's now stabilized and is actually showing signs of acceleration. The SLUs, which, everyone sort of focuses on the credit standard side of the SLUs, but I find the demand side of the SLUs to be much more interesting. And what it showed was essentially 100% of banks at the end, through the first quarter of this year, were saying that demand for mortgage borrowing had decreased meaningfully. And then what we look at is in this most recent survey a couple of days ago, demand
coming down a little more
borrowing from households has actually picked up meaningfully.
There's your
over the course
flush.
of the last couple of quarters.
There's your stop
and
hunt.
what that means is more demand to borrow from households, more mortgage credit trying to be created, higher yields on that credit in order to supply it, given the overall dynamics in the market. And that
448.49
is a pretty important example of how the Fed being behind the curve and not tightening and us getting a reacceleration in the mortgage market is actually translating straight through to the supply and demand for credit and rising interest rates. And so that household demand was a big part of it. And then on top of it, we've had this government story, which is probably more well known out there in the market, which is that the Treasury, basically didn't borrow long end duration for a while, both during the issue related to the debt ceiling, and then they refilled the TGA with borrowing in bills, which is, a cash-like and very easy to fund. And now they're recognizing they got 8% deficits. They've got to start to issue long-end bonds and recognize, earlier today that that'll come in the fourth quarter, which will create a significant increase in duration supply. And that's also hitting the bond market as well.
Okay. I want to point out a few things on a couple of these charts. We were just looking at the mortgage demand in that chart there that did kind of bottom out this year. What's interesting is we were so focused on the regional bank risk implications of what happened there with the West Coast banks. It seems like it maybe blinded the Fed and kind of the consensus narrative about generally the lagged effects from last year kind of having already worked their way through. It seems like everybody's worried about the lagged effects going forward. The bounce here after getting crushed the last 18 months kind of seems like the Fed's impact maybe has already been felt to a certain extent.
Yeah, I mean, a lot of that impact we saw, most of the tightening of credit standards and also the slowdown in demand really happened
TTLO new highs there
in the back half of 22.
Exactly.
And starting this year, actually,
bouncing.
What we've seen is even though credit and borrowing has been relatively modest and subdued, what we've had a fair amount of income growth, particularly for the households. And so it's important to recognize when your income growth is 5 or 6 or 7% a year, even those mortgage rates at 7%, while they seem high on the surface, relative to the type of income growth that you're getting, those start to look more reasonable. And so we saw a shift in line with the increased income growth that we've seen from households, and that's caused a broader reacceleration. And so you're right, some of those cyclically sensitive sectors of the economy, whether it's housing
Cyclically
or
sensitive
the
sectors.
manufacturing area, they had a bit of a drawdown and they've started to pick up a bit. That's a big reason why we saw pretty good growth in the second quarter, and that was really a surprise to most folks who were expecting a recession to get that sort of bounce that we've seen in the first and second quarters.
Is Bob, some of this described as far as thinking about what it means for investors, where stocks have been okay generally with the pickup in yields here up to 4%. Maybe they're starting to rethink that, but they've been okay. Correlations have come actually in a positive way between stocks and bonds. The big difference this year. When does that potentially change? Is that a story about the rate of change for yield, level of yield? What do you think the stock market pays attention to and when?
I think it really comes down to the transition from whether or not the Fed and frankly the market-based tightening is enough to derail further expectations of economic expansion. And I think today is a really good indication where you're starting to see that rise in yields. It's not coming from the Fed. The Fed is staying behind the curve, but just that bond supply is enough.
Might be in a sell-off into close.
Demand for borrowing into the market to
If
start
we
to
can
raise
get
those interest rates.
some more
And
retracement.
that's then feeding back
Back
onto
up to
the stock
450,
market. That's a really important dynamic.
45
when you see
area.
that flip from bonds
Up to
and
450,
stocks in
60.
a negative correlation to bonds and stocks in a positive correlation like you're seeing today, those are the first signs that the market is recognizing that this rise in yields is actually going to have detrimental effects over the course of the next 3 or 6 months. And we're right at that cusp, right at that point where, bond yields into the 4s is enough to start to create meaningful constraints on the economy. And it's not surprising that we're starting to see this market action that we're seeing today. The real risk is that for a 60-40 investor, this is about as bad as it gets. This is a rehash. Today is a rehash of what we saw in 2022.
Today's a rehash.
Most of those investors have not been prepared in order
ETO,
to
new highs there.
rehash of that type of event.
You literally answered my next question, which is what does the regime look like? How similar does it look to 22? It sounds like it could for a little bit until that kind of straw comes, whatever it is that breaks the camel's
What's up? I'm Gilly. It's been a while, man.
We have more of a recession conversation than inflation conversation. One other thing real quick, Bob, because we're almost out of time, but
Don't kick yourself.
A surprise
Could get hurt, and it's extremely difficult to do.
Justify a
Could get hurt just trying.
curve or just long yields going higher, or can they drift that way on their own right now if inflation just stays where it is?
Yeah, the pressure is for yields. If anything, the yield curve inversion has been a result of such incredibly low demand for credit that just even a modest normalization, which is basically what we're seeing, is going to start to re-steepen the yield curve. That then creates the pressure on broader asset prices like stocks. That then creates the downward pressure on the economy. But the ordering matters. The yields have to go up. The curve has to steepen at this point before you get to a point where the economy slows, before you get to a point where bonds become an interesting buy. So the order matters. First the yields rise, then they become the attractive buy, and we're very early stages in that dynamic.
By the way, an important point that you add on at the end of your thread is that this is actually all kind of, it's familiar, and it's kind of a relief to the degree to which it's kind of normal cyclicality as opposed to what some of the big doomsayers, the coiner world, and folks said was going to be like this hyperinflation collapse. Maybe even what Fitch is saying, right? This is not that story. This is kind of just the way it has always worked in the past, right?
Absolutely. This is a normal cyclical story. The idea that just because bond yields are going up in the late cycle when the economy is strong and borrowing is picking up,
TTO, new highs there.
We're going to have a dollar debt crisis. That's totally wrong. That's not
You're
what
at
we're
26
seeing.
cents brings.
If anything, what we're seeing is the very normal dynamics, and you can tell that very directly by connecting what's going on to what's happening in the dollar. The dollar is, doing pretty well, both on a level basis and on a change basis as these yields rise. And so that all indicates to me there's no great dollar debt problem. This is just a typical cyclical environment where rates will rise. which will then create the slowdown that then makes a good opportunity to buy the rates in the coming months.
Thanks a lot for walking us through it, Bob. Super interesting, and let's definitely be in touch.
Thanks so much for having me.
Absolutely. Bob Elliott from Unlimited Funds. Great
There's your
discussion.
scalp.
Let's
You
bring
took
it back
it
into the micro.
10% or so.
Let's hang out and have some wings, because it's one of the only things working today. Wingstop
Wingstop.
hanging on for the ride. Positive after reporting despite the market's pullback.
Error. Market is very weak. Might be getting a gap down again. Back into that short. Didn't get much of a retracement. There's a new low on the SPY. Just got 450s for tomorrow. We got 448.49. Not sure it'll make it all the way down there. PTO breaking that 26-cent level. A little flushy. This is the way. Okay, I'm selling one there. I only have 4 of them. Given they're not dailies, they move quite a bit slower. But coming into the end of the day, market can just dance all over the place. I expect maybe a big move even back up to here before end of day. Okay, I'm gonna sell another one there. Got 2 left. Waited all day for this. Alright, let's sell another one. Oh, he's tripping out, doesn't know what I'm doing. I've never seen you trade like this. Leave my last one for a bit. See if we make it all the way to 448.49. There you go, more flushing. Sounds good, Gillard. Thanks, man. Okay, I'm gonna sell the last one there. Cool. I think I made a profit from all those times I stopped out. 2 different stop outs, and 1 was successful. DTOO breaking that 26 cents. Buys breaking down some more here. Maybe. Still 30 minutes. Could reach down for that next support, 448. $0.27 on TTO. Rad's consolidating down there. 29.05 would be the next resistance on T2. Don't even know how to see this. Oh, I stopped out 3 times. I bought them at 155, sold at 182, 180, 182, and 183. Nice, Cameron. Well done, dude.
Higher margin products for them also. They are selling more of the food items here, but earnings were pretty good on this one. The stocks still underperform. Maybe that's why some people kind of dipping their toes in here. Global comparable same-store sales up 10%, driven by 5% increase in transaction, 4% increase in average ticket price. North America and U.S. comparable sales up 7%. Now, initially, it was down near $99 after this report. That was probably based on the fact that they expect global comparable same-store sales to be up 11%. But you're seeing that rebound in China. That was a key for them because that disappointed last quarter. They thought they were going to get the rebound last quarter, but it came this time. But I think people were in there buying the dip because now the stock's up only 3% year to date. So a lot of call buyers in here. Call buying is about 4 times normal daily average volume that we've seen over the last week of trading. We saw a trader in there buying some September calls. They bought the September 105 strike calls about 5,000 times for an average debit of $1.50. So that break even of 106.50 over the next 44 days. It's only 4.5% above
Barbecue's
the current share
green.
price. They were also in there buying
Little bit
September
of green.
110 strike calls and some near-term options also. So yeah, a lot of call volume in there today. Maybe see people trying to maybe pick a bottom in here that we've seen the trough was last quarter as far as earnings goes, but they still have solid growth numbers. The question that I have, Oliver, is the price target hikes in there. When you go get your breakfast sandwich and a coffee from Starbucks, it's going to cost you probably $12, $13, right?
Yeah, welcome to America.
And it's not a discretionary item for a lot of people. It's a staple. Maybe that's what's keeping people coming back. But at some point, getting a coffee and a breakfast sandwich 5 times a week or something, that's real money.
Yeah, well, it's called the Lux Life, Tom. I thought you knew all about that. Come on, man.
Starbucks aren't open when I'm in here at the office, so I can't stop and get a Starbucks.
Right here.
I can't get a Starbucks on my way in.
All right, shares a little changed on the air after their big gap up at the end of the 2022 season. It hasn't gone anywhere, so it's not it's kind of a ho-hum thing.
It kind of reminds me of the Disney chart a little bit. It's underperformed the overall market.
Disney's down at like lows. Starbucks is still at least up from $81, 52-week low.
Yeah, missteps as far as the Disney side, but Starbucks, continuing their growth trajectory, and if they continue to see that rebound, because they're going to open. I think they've got 6,000 stores in China now. I think they're supposed to open another 3,000 in the next couple of years here, and that's their bigger growth area.
Okay, down today. Qualcomm lower by 2%. Earnings coming out shortly.
Yep. And option market pricing about a plus or minus 5% move in the shares.
Not
outsized.
Yeah.
IV ranks about 35%. So with the overall market kind of being up, implied volatility muted, that's why we're not seeing expected big moves in there today. They're expected to make about $1.92. With revenue of $8.7 billion at this point. Global smartphone demand has been soft. Canalys said their second quarter worldwide shipments for mobile phones fell 10% year over year. Now, that's a concern for them moving forward, but the automotive side of their business may see a pickup. We've seen strong demand for chips for autos. And China just had, we just mentioned that with Starbucks, the rebound in China sales.
Its cup today.
They've seen a rebound in smartphone purchases through the end of May in China. Also, that might help them. They've whittled down the revenue that they get from
needs
Apple
to build a
down to
handle.
about 20% from 30% over the last couple of years. So that's a positive if Apple does leave them. But we did see some near-term call buyers in here expecting the shares to pop post-earnings. Traders were buying 6,000 of the August 4th weeklies that expire in just 2 days. The 135 strike calls, average debit of $1.60, so that break even of 136.60 over the next 2 days, about 5% above the current share price, right at that 1 standard deviation price that the option market's pricing in.
This trade needs the minimum. The options expected move.
Yeah.
Oh wow. All right. So it's a pretty darn bullish trade then.
It is.
Right ahead of the report. All right. 129.61 right now.
Yeah.
Down on the day. Nvidia's down 2. That's your last trade.
Yeah.
Getting dragged with AMD today.
Yeah, down 5%, but still up over 200% year to date. Oliver, they got earnings on the 23rd of August. I think this is going to be a key catalyst for them because remember the last earnings event when the stock jumped like 3 or 4 standard deviations on that guidance hike from 8 billion to 11 billion. For this quarter, strong artificial intelligence demand for their chips And I think somebody's setting up for this earnings play because they're out in the August 25th weekly series. We'll capture that earnings on the 23rd. Traders were buying 8,000 of the 460 strike calls, average debit of $25.50. Look at the size of that debit for these slightly out of the money calls.
That's a believer.
$25.50. So that break even for this trader at $485.50 over the next 23 days. That's 10% above the current share price.
$20.4 million on that one.
Remember when it moved last quarter?
NVIDIA call?
10%'s nothing for this stock. Over 650,000 calls traded in there today. So loading up on the dip, buying the dip here and using calls in NVIDIA.
That is one heck of a bullish trade.
Not really. I mean, we could be at 485 by the time earnings comes out on the 23rd.
For the first time to see this stock, and more importantly, AMD actually on its earnings, the first shred of some real AI disappointment with AMD. People go and buy bets on a 10% rally in NVIDIA going into its earnings.
But what's the difference there? One company, AMD, doesn't have a chip out for AI.
True, of course.
NVIDIA's already got their out demand.
Maybe it's an anti-AMD bet then, maybe, that they're not going to compete with NVIDIA on this one. But
I think the 5% pullback today is allowing people to buy calls.
Sure.
Yeah.
Okay. All right. Nice trade. Interesting. Thanks, Tom. Bullish trades in a down market. Jane's going to take us through a big drop in Spirit Aerosystems, one of the.
I'm liking this consolidation around 50% on.
Boeing's also been
Brad.
under pressure throughout the day, but this is a pretty major sell-off in Spirit. We'll talk about why.
$20 minutes to close.
quarter, compared to around 318 in the same period a year ago. They did state that the changes they've seen in operating losses were driven by these higher charges and changes in estimates, as well as contra revenue recorded for their potential customer claims. Their backlog stood at around $40 billion at the end of the second quarter. The cash balance at the end of the prior quarter was around $526 million. They said they won't be able to, though, recover some of those lost manufacturing days as a result of the workers' strike, which was then reflected in this earnings miss as well as their overall cash flow figures. They will reduce their full year 737 deliveries to around 370 to 390 units, which negatively impacts their expected revenue, earnings, and cash flow now for 2023. They said that although they have resolved some of these issues they've been dealing with their workforce, and they have reached a 4-year agreement, they are still seeing some vertical attach fitting issues on some of their overall units in addition. So while they have resolved one problem, it seems like they're still working through another problem. Again, part of the reason we're seeing this massive move to the downside today. So they now expect their annual free cash flow burn to fall between 200 and 250 million. That is up from its prior guidance, but it's still been a pretty disappointing past couple of months for this names. And I think anytime you have consistent issues, like you have this worker strike, now you have some parts that are going to delay your production. I mean, it's sort of like, what do we have to look forward to here for this name? It just feels like it's headwind after headwind.
Yeah, not great, especially when the demand is high right now for the end product, and Boeing's getting orders and needs to get the planes out, and the airlines are complaining about there not being enough planes. This is a pretty key part of that supply chain now that's not going to live up to expectations. We've even seen in some of the durable goods numbers the big role of commercial flight demand. So important story, could have easily gone overlooked. Thanks, Jenny Horn. Great look here. Spirit Aerosystems down more than 20%. Pandemic, managing partner at KKM Financial and host on the TD Ameritrade Network this afternoon. Great job, Dan, and good to have you back here. So session get kind of interesting. We're down near the lows of the day. Tech's the worst performer. People are in staples and utilities. That's it.
Healthcare. Ooh,
yeah,
healthcare.
Barely. Yeah, it's flirting with it.
Yeah, it's catching a little bit. Catching a little bit of it. Yeah, Oliver, definitely the rotation that you kind of expect to see when there's some disruption in the market, where you're seeing allocations and money flows going into the safe haven play, at least temporarily. The dollar being another one of those beneficiaries today. But, you know, we'll see how it plays out. I mean, it rocked the markets a little bit, this downgrade, but the markets were a little bit ripe for some type of selling pressure here after the big run we've experienced the last couple of months. So I don't think it's anything too concerning at this point. We'll have to see how the data falls out the next couple of days. But the fact that we are at least coming
it's like Brad wants to maybe
as we move towards
pop a little bit.
It'll be interesting to see how we settle out. But at least it looks like the markets are trying to get off the lows.
With the dollar up today, you've got a little bit of weakness in crude, but also an inventory yesterday and today that showed a pretty decent draw. So I'm kind of having a little trouble figuring this out. Did I miss something?
Not that I can see, Oliver, other than maybe that crude was a little overbought as well. But yeah, you see a draw of 17 million. That's when the expectation of basically down slightly or maybe unchanged. That's significant. I guess counterbalance that, gasoline inventories actually came in about 3 million higher than what it was expected, with a gain as opposed to a draw. But overall, that's a big draw, and you are seeing supply now really starting to come in from a global perspective. The other interesting dynamic here, Oliver, is the rig counts continuing. The active rig counts are trending lower here throughout the year as producers just don't want to get stuck if oil was to drop significantly. So with that and the OPEC Plus cuts, you know, even with the selling pressure today, I think maybe it's just more of a reaction to the overall selling pressure we're seeing in the market as to anything that could disrupt the current uptrend.
So WTI, I guess, still kind of has a little bit of scar tissue from the last year, a little sensitivity where investors may be ready to take profits on some actual good, clearly bullish news, right? I mean, you have that big of a draw, that's a lot of demand. That's bullish.
It is. Yeah, you would think
so. It's like a good earnings report.
Absolutely. Yeah, you would think so. I think the one, the caveat would be, this kind of canary in the coal rate, call it, of if this is a tipping point for economic activity and things of that nature, with that kind of dialogue being kicked around now, with the U.S., possibly not in as good a shape as what a lot of the psychology, at least in the market, Oliver, was leading us to believe.
coming.
A lot of the big banks
Going back down a little bit. It's got VWAP
putting
below
a
that
lot
23.6% retracement.
emphasis, on the downgrade, but that's yet to be determined. And psychology is a huge part of this market, and I think that's what we're seeing play out today. I hope that it doesn't turn into something more significant if we see a shift in consumer sentiment and things of that nature.
All right, good wrap here for us on the connection with the commodity market. Thanks, Dan.
All right, Oliver.
You got it, managing partner at KKM Financial. Crude oil lower, but so are stocks too. So kind of in some textbooks, the risk-off nature of today's session, might think crude would be down, but maybe just a little profit taking after some pretty solid signs of demand. When we come back.
All right, there's the market. Sorry to step away there for a sec.
Where our sentiment
Did we
is,
do that? Oh man.
if that IPO goes through, at
Well,
the right
SPY down
time versus the
1.3%.
wrong time could make a big deal
Looking
in how,
pretty
difference in how it's priced.
topish.
You know, if you're
Start with that
trading
engulfing
when
candle.
Nvidia's blasting off 11%
I think this
per
gap
quarter, or
build to the
when you're
downside
debuting when AMD's down 5%
shortly
per quarter, two
in
very
our
different
future.
environments. I think it's worth also reiterating
TTO
what
ripped
Nicole
up
just
today,
said there, Kevin, which
54%.
is for most companies
Built a
in this
nice
sector,
cup here.
outside of
See
Nvidia,
if we get a retracement
we're
for a
still
handle.
dealing with contraction on an annual basis. The hope is
Barbecue
that
end of the
this
day
is
up
the look-ahead
1.95. There you
turning
go.
point.
Still below the
while I still
downtrend.
think we can hope that it's not necessarily a
is up here.
surefire thing, it looks like outside of basically Nvidia.
And
Yeah, definitely. And you also
GME
have
down
to ask the question as
3%.
well. I mean, this AI craze is going to be nice.
Rad did rip up
At the end of the
today,
day, you're also
up
asking a
31%.
company to really just shift their overall production
Nice consolidation of
methods
that
and their
50%. See if
product
it
mix,
see if it holds
fairly
this
rapidly. And that's also
this level at all
something
tomorrow,
that's
or
going to be a little bit scary for a lot of companies,
yeah,
because
it's
at the
looking like a
end of
nice
the
bull
day, we
flag
could
though.
see a situation
Intraday
right
up.
now where we have a shortage
I'd
that
like to keep
turns
getting
into a glut
exposure.
in a year from now. And then what are you going to do if there's not
Open up
demand there? So I
3
think
trades today for the Theta Farm.
these companies are
I sent messages to the members on there,
that we know has
what they are,
exposure when it comes to mobility
and
chips.
sold some
They
Tesla
do
out of the long
estimate
term.
that handsets units will actually
Day
be
trade
down
some
at least
SPY
high single
options,
digits,
some
compared to
futures.
2022. So they're
Kind of a
calling
hard
out
day to
right
trade,
now.
honestly.
This might be the kitchen
Again on
sink
here,
type of quarter.
another
They're laying
choppy
it out,
day.
hey, right now
Chop.
we can't
This day
see
did have
any,
somewhat of a move.
foreseeable bright spots at this point in time.
Remember how we did on that day.
And there may be
Even this day's kind of hard because it just you're basically just playing the breakouts, which is always sketchy.
Expectations low, so people aren't
Bear flag breakouts.
they're not continuing to get hit each
And
and every quarter if they're not meeting
what do
these
we do?
lofty expectations like we saw from Nvidia.
So there's Rad. I sold those calls this morning. Unfortunately, those would have been 1,000 percenters. Yeah. Anyways, here's one day traded on SPY, stop out of, and then bought back into Rad. August $3 calls.
Let's talk Etsy for a sec.
And then
it's down. It still to me is like hard to
stopped out of Mullen.
Remember that this is
and still have costs and PTRA. I'm gonna change this to a cash
dollars
account so I can
it's having a little bit of a tough
do some day trading.
Market down by about 8. So let's move
And yeah,
quick, about 8%. Sales
like with all my orders. Thanks, Bob. I appreciate it, man.
629 million and change, 628.9 versus 622 roughly an estimate. So they did have a
TBLT.
Nice
Yeah, I like the gap on TBLT. That one looks like it
Earnings
could.
Came in at 45 cents. Estimate was for
Need it to kind of break here. Well, we actually have a little cup here.
The thing about this stock is
Interesting.
also, I think, just in the growth category, Nicole, it's just having trouble really telling a story about why it
Yeah,
should
but
be
starts to show some bullish formation. Looks good for at least a retest of that high. Breaks that, then got a nice gap to fill up there.
Generally on the top line.
You know, you started out with a sentence like, you know,
It's kind of a guess. Bought versus sold.
I have a hard time knowing Etsy.
But yeah, there's ways to look at it.
Yeah, basically.
It's not even in
harsh but
Rough day for you.
It's not even in my wheelhouse. What is it? You know,
Yep, that's good. That's good poison. Stick with shares. Learn how to go long. Learn how to go short. We'll do all of that before options. I would actually even trade futures before options. And then I'd start with selling options. But that's what I got, guys. Thanks for watching. Appreciate the support today. Pretty exciting, more or less, the sell-off. 39 likes in the day. Well done. Thanks, Poison. Thanks, Bubba. Thanks, Tree. Thanks, Psych You Up. Thanks, Cameron. Thanks, I'm Gillied. MCC. Ronald. Muhammad. Appreciate it, guys. We'll see you on Discord. Oh, I never pinned that. If you're not on Discord here, I'll send the link right now. Here's our Discord if you guys aren't on it. It's free to join. See you on there. See you on Twitter at Tapping.